Morning all. How are we all doing? Happy August. It's the new month. Woo! All back to zeros on the dash. Boo. How are we doing? Morning, everybody. Peter, David, JC, Jerry, John, Sarah, Amy, morning. Baggy. Morning, David. Made it to a London session. Blimey. Morning, it's time. Morning, Blue Trader. Pontevedra, raining again. Boo. Raining in the UK as well. This is summer. Funny, isn't it? Kids break up. Rains. Doesn't stop. Kids go back to school. Sunshine. That works. We're going to have to put school holidays back to September. Morning, Michael, Christian, Virginia, Liseron, Keith, Stevie, how you doing? Just checking out the H1 hedging strategy on the VPS. Absolutely killed it this last week. Look, this is the beauty of hedging. As soon as those moves start, you just have these massive, massive weeks. So yesterday banked 4%, 7.7% day before, 1.78 day before that, 3.28 day before that. That's like 16% profit in 4 days. Unbelievable. Right, actually, I'm curious to see what it did last month. Last month, 7. That'll do. Something like that. 34 grand. 34% last month. Big month, that is. That's the H1 hedging set file that's in the Telegram group. Very big profit. Right. After that. So ADRs. So news, Australian dollar. They went 4.1. Confused.com. Very confused by that. Very confused. If you look at the fundamentals on the Australian dollar, their inflation is still at, this is twice now they've done this. Their inflation is 6%, way too high. And yet again, they decided not to increase their interest rates. I don't know what they're playing at. I really don't. It's all over the place with the Australian dollar. They've had lots of rate pauses where they should have increased. They've had increases where they said they were going to pause. It's just, doesn't make any sense. So last month we had an unexpected rise in May, an unexpected rise in June. Last month they froze when their inflation was coming down at a slower rate than everybody else's. This month inflation is still at 6%, double what most people want it to be at least, and they've paused again. This can't be good for the Australian dollar. So we've had a negative reaction, obviously, this morning. Not as bad as I thought it would be off of that news, but it's coming down. We could easily, market hasn't opened yet in London or New York, so we could easily have a 200% ADR day on our hands today. So watch these Aussies today. That is not good news. New Zealand dollar. I've got New Zealand dollar CAD long on. I've been watching this like a hawk all morning. So there's the news spike this morning. Because the New Zealand dollar moves with the Aussie a lot of the time. It hasn't been as affected as badly, but they're economically connected. So what I don't want to be is long New Zealand dollar CAD if the Aussie is going to collapse, because if the Aussie collapses, New Zealand will get dragged down with it. So I'm watching this morning at the open. If this gets to break even, I'm going to flatten it and get out. I'm not going to take a loss on it or going to draw down on something that might collapse with this Aussie. So I'm not sure about it, but that's not good news for the Aussies. So yeah, we'll see what happens on that. But I'm just going to watch that one. I don't mind taking a small loss on it either, just to get out and get flat. So that's the overnight news. Obviously, Weird. I'm not sure why they've done that, but they have. Again, they keep screwing it up, and every time they do it, their currency collapses, and they just don't seem to learn. But what can you do? We got PMIs for the US dollar at 3 o'clock, half an hour after market open. So the open might be a bit weird this afternoon with New York. And then this evening, we've got the unemployment rate for the New Zealand dollar. Again, another reason, if that goes up, I don't want to be in long on New Zealand CAD. Another reason, obviously, I'm also watching this New Zealand as well because it's against the Canadian dollar. Oil's been rallying for weeks, and this thing is due a pullback. When oil comes down, the Canadian dollar will come down. So I am long New Zealand CAD. So if the Canadian dollar if the oil price comes down, the Canadian dollar will come down, which will help this New Zealand dollar CAD rally. But not convinced this oil is coming down. It's massively overdue a drop. Look, we've had what? Don't know how many days now. Weeks of this thing just going up. But it hasn't helped the CAD much. So any kind of weakness in this, I think, might weaken the CAD. But that will obviously be good. But just don't like it. Other overnight news, again, Aussies. We expect inflation to reach 3.25 by the end of 2024. Not if you keep freezing your interest rates, you won't. Inflation is set to return to target of 2 to 3% by late 2025. Basically what the US is forecasting. Yeah, the US is forecasting the same thing. They're sitting on 3% inflation, not 6. This doesn't add up, any of this. It doesn't make any sense. But anyway, further monetary policy tightening may be required right now, I would suggest, but I'm not an economist, so hey, you do what you like. That's about it overnight. We've had Japanese unemployment rate 2.5 off of 2.6. So their unemployment is coming down. Bullish Japan, but a lot. So that's it. Overnight news. Markets dropping at the open. We've just opened. So let's have a quick look at the DAX. So we've got ever such a tiny little gap thing at the moment. It's not really a gap, but we've got ever such a micro gap on DAX available. If you took the pre-market today, well done. That's TP. You've already hit a target. Jesus, that was a big one. Okay, so at the pre-market open, we've had a drop of, looks like 2R to me, something like that. Yeah, easy 2R at the open on the pre-markets. I'm taking the opening ranges at the moment. I've decided not to take the pre-markets at the minute. So looking at the DAX today, again, yesterday, all-time high was put in, but the market rejected it. So this is now last month's high. As you can see, the purple line's gone in. So this is the high of July. We did take out the high, but the market pulled back down. So we opened there and we closed there. So basically yesterday was pretty much a doji. So that's the first kind of signs of potentially a pullback starting that we've had. So from a downside momentum perspective today, we've got these lows coming up, which is the previous day's low, which is within ADR. We've got a propulsion gap there at ADR. And then we've got the recent highs, which is sitting down at 125 ADR. So there's plenty of room to the downside. Upside, obviously, will be yesterday's high. So we'll see where we go. At the moment, it's flush to the downside. We haven't got a lot of stocks today. So there might not be a lot of sector buying or selling going on. There's the earnings today. I think we've only got the pre-markets from yesterday. Where are we? July. Yeah, so pre-markets today, we've got, this morning, we've got CAT, Merck, Pfizer, and AMD. Oh, no, sorry, CAT, Merck, and Pfizer, AMD, and that lot are all coming out after market. So we've got those three this morning. Unlikely we'll get massive sector purchases off of those. I'm just trying to think. Shipping. I don't even know what sector Caterpillar is. They make all sorts of stuff, don't they? wouldn't class them as motor, would you? Industrial machinery, I guess, and healthcare. So there's only the single in that. So I doubt we'll get a lot of movement off of stock earnings today, but DAX certainly come to the downside at the start. So we've got 2 minutes left on that candle. We'll see where we go from there. Looking at the Dow, if you wanted to take a Dow trade today as well, I'm starting to get into my Dow trading with the DAX, because it does move very, very similarly to the DAX. So not with as much vigor, but it does move. So it's probably the best thing to trade in the Globex session. So looking at the Dow, obviously that low there, which is the New York Open, is your initial sort of target to the downside, and obviously yesterday's low. Upside, we're up at yesterday's high, which is traded down from in Globex. So if it comes back up, Globex high as an initial target, and then that monthly high up there. So plenty of room in both directions. It's very, very unusual for the Dow to put in anywhere near an ADR in Globex. So if you have a busy day, busy morning on the Globex session, you might get half an ADR out of it. That's it. So it's not something you're going to get tons out of. So I go with large contract sizes to negate the speed of movement. But it will usually break with the DAX and go with the DAX. So there's another option for you this morning if you're trading futures. And I did a Brian. Brian, you in here? No, you're not. Stevie, it's 34 degrees here today. Very nice. Morning, Francisco. What's your record percentage for a week? I don't know. No idea. Don't keep track of it by weeks. Morning from Melbourne. So I did a Brian, basically. I did just over $2,000 yesterday in my futures account. I was rubbing my hands in the session yesterday morning. I was in practice mode. Looked at my account this morning and I was like, where's that $2,000 gone? I was in practice mode. Lesson, trade of 8. Make sure you select the correct account. Anyway, so this morning I want some money out of the Dow. It doesn't owe me anything, obviously, because that's not how we work, but owes me. Chris, makes that Aussie dollar yen short even tastier? Yeah, possibly. We'll have a look at the FX pairs in a minute. Morning XR.news. Amy, where can I find the H1 hedging set file? In the files section in Telegram. If you go into files and if you go up there and type in Lee, it is there, H1 hedge test. I've called it test because it was a test to see how it worked, and it worked. So take the word test off, but it's just H1 hedge. You can also search for set. Just search for .set. You'll just get all the set files. Files is there. Morning, Andres. What should I do with Euro US dollar? Should I buy or sell? I don't know. I'll have a look in a sec. Right, so ORBs are in. So there's your 5-minute opening range. So yeah, there is no momentum at the moment. Dow's gone long. So we see how we get on with the Dow, but it's gone long at the moment. Right. Okay. Still hanging in there. That New Zealand dollar CAD. Really undecided what to do with that. We're not going anywhere on the DAX this morning. So what do we want to look at? Sorry. Too many things going on. Aussie dollar yen. Yeah, so Aussie dollar yen as a short, yeah, that reversal from yesterday. So this was an H1M, an RSI extension yesterday. I didn't get on this yesterday. It didn't quite get there for me. I wanted 75, didn't get it. Yeah, so it was lovely. We looked at this, all these, I said, you know, watch these areas. This was, I think, 175 ADR yesterday, wasn't it? 218 off of 135, so near as damn it, yeah, about 150, 175. So if you took that M5 yesterday, anywhere up at ADR, it's playing out nicely today. We'll wait and see what the market makes of this, but obviously, as you can see, the Aussie news has tanked everything. Aussie, as you would expect, they haven't increased their interest rates. They said they were going to. So, although it was forecast they were going to, they didn't necessarily say they were going to. But so, as you would expect, markets had a negative reaction. If you look at all of these Aussies, from a long-term perspective, we are sideways on the US. We are sideways against New Zealand. We are slightly bullish against the yen, but then again, everything is. The Swiss franc, massively negative. Canadian dollar, more negative than positive, but very much still range bound. So, you know, there is no real advantage either way on the Australian dollar, but I would be more inclined to take sells than buys at the moment, just because of that news. I know they say that they're looking for inflation to get down to 3% by the end of 2024, but that's a long way away. That's 18 months away, right? So if they're happy to stay with high inflation and high interest rates for 18 months, that's not going to help their currency or their economy. So I don't necessarily think it's the right decision to make at the moment, but you know, central banks do what central banks do. So so we'll see what happens with the currencies, but it's probably more of a sell than a buy, the Aussie at the moment. If you look at the buyer scorecard for the Australian dollars, as you can see, the vast majority are sells, but there is quite a large bias on those two, specifically because of retail sentiment being long the Australian dollar at the moment, being long those Aussies at the moment. So, which makes them a sell. So when they come out of that, that's going to go back to kind of a -3, which takes it range bound. That'll go back to a -4, which is still a sell. These two are still sells. So there is more of a negative bias. And obviously Euro odd, we've got a massive buy bias, which is negative Aussie. So everything is fundamentally pointing to a sell on all Aussie pairs, but not strong. These -7s, 8s and stuff, this goes up to 14. Yeah, so they are fairly strong, but not massive. I don't think there's an advantage really massively in either direction. But if you had to put a gun to my head and said you can only do one thing with the Australian dollar, I would much rather sell it than buy it. But that's let's wait for the market to make its mind up. The ADRs, as you can see, yeah, when you get an unexpected interest rate change, you see the ADR dash like that. Most of the time, we haven't had any reaction out of Asia. So let's see what London makes of it first. What else did you want to look at? Euro US dollar. Neutral at the moment. There's nothing going on in it at all. It's flat. Yeah. You're bang in the middle of that area. There's more upside target there. The euro should be strong. However, this afternoon we've got US dollar news in the shape of the PMIs. So we're not going to get a lot of movement of the US dollar this morning because we're not going to pile a load of cash in before the PMI figures come out. So we'll wait for those PMIs and then you'll get some movement off the US. Very difficult to tell. They're forecasting PMI to increase. It should really, I think, but we'll see. If it comes out as a negative, it will tank the US. If it comes out as a positive, it will push it. But at the moment, we'll have to wait and see. We've got JOLTS job openings, which will give us some insight into what's happening with the unemployment rate at the end of the week as well. So difficult. There's not really a lot to look at today at all. So, there's not, I can whiz through all the pairs. There's no volume in the market at all today. Anywhere. Dax is just gone short, literally just got a short on. But it's, we've gone inside bar on the opening range, so it's not going anywhere today at the moment. Flat as a pancake, everything. So RSI's dashboard's flat. So there's no RSI extensions on the hourly, no RSI extensions on the 4 hourly. We didn't have much yesterday, last week, towards the end of the week. We didn't get an awful lot either. So I'm going to give it this week. If we don't see a lot happening this week, then it's probably time to start shifting the RSI down to RSI 14s, because we are entering summer trading and the number of signals drops. So it does depend on world events, market events, etc., etc. Hold on. Short on the Dow. So Dow's broken short. It's trying. Might be a little bit of a whippy one today, but we will see. Yeah, so if it remains, because you can see by my exposure at the moment, I haven't got a lot on. Everything's played out. Had a 24% month in July, which was fantastic. But towards the end of July, it's been a little bit tricky trying to get some profit in, because there's not been a lot of opportunities for mean reversion, because obviously the market's been very flat. So if that remains no exposure and I can't get any positions on the RSIs, the only options really you've got are ADR reversals, or to change your RSI setting down to 14, maybe for 4 weeks, 5 weeks while we go through the summer months, and towards the end of August, then flip it back up to 21 in preparation for September. So we'll see. But I'll give it this week. And if, we're doing like 10-minute sessions because there's nothing to look at, we know that we need to adjust it. In fact, what might be an idea to do is run this side of the dashboard as an RSI 14 on the hourly, and run the right-hand side as a 21. Because if we're not getting any extensions here, we're not going to get any 4-hour RSI extensions. Yeah, you got to get an hourly extension to get a 4-hour extension. So that isn't going to light up if that's not lighting up, is it? So it might be an idea to switch this over to RSI 14 on the hourly. I might do that actually now. Just so we can see what the difference is. It is very quiet, but it is non-farm payroll week as well. So there we go. So there's your RSI 14 hourlies. So you can see we got Aussie CAD not extended on the 21, but the 14 we've got an extension. Yeah, so that's the difference. When you've got a light market with light movement, light liquidity, switching your RSI down to a more sensitive instrument level is going to give you a faster reading. However, the danger with faster readings is if you're getting in earlier on potential movement, which means if that is turning into a big strong move, you're in sooner than you want it to be, which means you will typically go into 1, maybe 2 positions more of drawdown on each trade. So typical for me is 2 to 3 entries is my average to get in and out. That would go up to sort of 5 to 6, which means that your drawdown will get extended if there is a strong move against you. And obviously just becomes a little bit more squeezy sometimes. So you just got to be a bit careful. But I'm going to leave it on 21 for the minute. As I say, monitor it this week. We might get some RSI extensions off the news this week, because obviously we've got a lot of news coming out. We've got the CPI for the Swiss franc. We've got PMIs this afternoon. Obviously, it's non-farm payroll week. So we've got the unemployment rate for the US. We've got the interest rate for the pound coming out. So there's a lot of volatility on the cards. But if we find that we just get whipsaws and we don't get any strong movement off of those, we're going to need to obviously look for opportunities in a different way. So we'll see how we go. But yeah, nothing to look at there. ADRs today. Okay, DAX short is working. Aussie dollar Swiss. So that's extended to the downside. We just tapped straight in. Oh, look at that for a hit. That's a textbook RSI look. If you want to see one, look at that. Bang. Bullish engulfing straight off ADR. Boing. Reversal alert. That is coincidental. It's not doing that because the ADR line's there. But yeah, that is a nice one. Basically one ADR straight down though. So that should tell you something. Yeah, we've had some news on the Australian dollar. It's gone one ADR straight down. Do you really want to get in front of this? Maybe, maybe not. Let's wait and see what London does. But we've got a nice support coming up at 150 ADR, which is yesterday's low. That is also last month's low as well, which again tells you something. If Friday last week there was last month's low, what's it been doing all month? Coming down. It's finished at its low on the monthly. So if you look at the monthly candlestick, actually it's pulled back quite a bit, isn't it? That's a big pullback. Mind you, it's a tight month, that's why. But yeah, we've got some nice support coming up is the point. So that is coming down. Possible long opportunity, but I would think twice about potentially trying to buy the Aussie. Just wait until we got some impact and some reaction from the market. This news only came out at 5:30 this morning, yeah? So that's 5, 6, 7, 3 hours ago. So these last 3 hourly candles, there's your news. Look, that big candle there, that's your news. And then that's the reaction. So the market is selling off the back of the news. So maybe not get in front of it just yet. Euro odd, if you're using the EA, obviously it's going to trigger you in automatically. So you might want to maybe manually intervene with them. Euro odd, hit to the upside. I'm looking for opportunities to get into some Euro longs. Haven't had any extensions, really. That was the last entry long down there. I didn't get into that one either because it didn't quite get there. So not going anywhere, but the bias is long, Euro odd. If you look at the bias scorecard, there's Euro odd. Look, it's a +8. COT bias and fundamentals all pointing upwards. If retail suddenly starts shorting this, that's going to become a +10. Very strong buy. But, you know, even with a very strong buy, this thing's not really making a lot of progress. This is an entire month. Ain't gone anywhere. Yeah, market's flat at the moment. It's really flat. Pound odd, same thing as Euro odd. We haven't gone anywhere for an entire month. We're just sitting inside a big range at the moment. Again, bullish pound, bearish Aussie dollar. Yeah, pound odd. It's classed as range bound at the moment. It's not really that range bound, but it is. I mean, obviously it's range bound. You can see it's range bound, but the pound should remain bullish. Really going to depend on what Bailey says on Thursday when we get the rates coming out. So rates are on Thursday at 12 o'clock, and then Bailey is at 12:30. So the press conference at 12:30 is what's going to move the pound on Thursday. Whether or not we get forward guidance as to bullish or bearish, we should get bullish. No reason why Bailey should talk the pound down. So we'll be looking for longs on that one as well. So obviously that's an ADR hit to the upside. You can take that assuming that it's going to come back down. So drop down M5, wait for the reversal alert, which is going to be there. When you get the reversal alert, obviously you can take it short, but I would, you know, there's a strong probability you'll get the reversal alert and then they'll break the highs again because this obviously Aussie is short. So the only options you've got with these Aussies today is really just to jump in while we're extended and hope that you can get 200 ADR day out of it. Other than that, no real opportunities. So that's all you got. There's literally nothing much else to look at. Aussie dollar CAD extended on the 14 to the downside. Aussie New Zealand extended to the downside. Aussie US extended to the downside. Again, don't really want to mean revert any of these at the moment. So tough to get into anything at the minute. NASDAQ, the DAX is out the lows. Very nice break to the downside. If you took the 5, Jesus. You took the, anybody take the pre-market today? or more importantly, if you took the pre-market today, are you still in it? Because if you are, you're on 6R. Straight down. Absolutely no reason to get out of that trade this morning. It hasn't given you one bullish candle or signal. Ah, gutted. Outro. Stopped out at break even. See? Break even stops. Do exactly what they say on the tin. They break even. Yeah, 6R break to the downside on the pre-market 15. 5-minute ORB today, which is the one that I'm in at the moment. Just approaching 1.5R. You see my target down there. 2R. That's T1. So yeah, quite a big strong break on the DAX. So downside momentum. Want to be watching yesterday's low. Sorry, Thursday's low. Sorry, Friday's low. It's Tuesday. School holidays. And then we got that low there, ADR, which is your propulsion gap, which is that accumulation break. So there's two potential short targets there. May hit ADR. We'll see. Right, that's all we got for you this morning. There's nothing to look at. It's literally flat as a pancake. Range bound. We can whiz through all the pairs and look for range bound opportunities, but you can probably see those very clearly anyway. Morning, Ian. Morning, Kenley. What's your comments on New Zealand US? Same as the Aussie, really. I'm in New Zealand dollar CAD, which is exactly the same trade. So the New Zealand dollar CAD and the New Zealand dollar US, if you look, yeah, pretty much the same chart, virtually. So at the moment I'm long it, but I'm looking to get out. I'm just watching the P&L basically. It's virtually flat as it is right now. I don't like the look of the New Zealand dollar at the moment, because if this Australian dollar does collapse to 200 ADR today, the New Zealand will get dragged with it. Not necessarily meaning the New Zealand dollar is bearish. We have got news coming up on the New Zealand dollar overnight. Their unemployment rate's coming up. So if the unemployment rate drops down to 3.4, they're forecasting it to go up. If it drops, that'll rally the New Zealand dollar. So there is potential for this New Zealand dollar still to rally on its own merit. But if the Aussie dollar comes down hard today and drags the New Zealand dollar with it, and then the unemployment rate goes up on the New Zealand dollar tomorrow, you're going to find yourself down at 200 ADR. So it's not the best long in the world. It's also not the best short in the world at the moment. It's just neutral, isn't it? Look at where we're sitting. There's no extreme moves in either direction. You got propulsion gap targets to the upside. You got propulsion gap targets to the downside. Yeah, there's just nothing on this that says go long or go short. Pick one if you want to. It will go one of them, won't it? So if you want to go long and head for that propulsion target there and last week's high, do it. If it drops, scale in and wait. Yeah, it's moving nicely. There's nothing. There's no way you couldn't get out of any trade here. We had a big, strong 2-day push there. I got 3 positions on an exit. Yeah, so if you'll be able to get out of it. It's just going up and down. It's just that there's no triggers really for an entry at the moment. There's no market condition that says I want to be in this. Even on the RSIs, so now I've switched the dashboard over to 14s and 21s. There's nothing extended. If you can't get extended on a 14 RSI, just might as well stick Bollinger Bands on the chart. You're not going to get extended on those either. Just not moving, is it? So we'll see. Nothing to look at. Sarah, no, took OLB. Yeah, OLB is good to take though. Still going well today so far. So we've got a propulsion gap target in on the break, which is good, which has been retested. So if we break that low, hopefully we can flush down to there, which is 2R on the opening range. But we'll see. The Dow's just pulled back a little bit as well. See what I mean about the Dow and the Dax? Doing very similar things, yeah. Yeah, so from the open, obviously the DAX will move faster and harder because this is the exchange that's being traded. But in Globex, this goes the same with the sector purchases. So it's not as easy or reliable to trade. But, you know, if the DAX is shorting, the Dow is typically shorting too. As you can see, you know, this is now put in a new low. This hasn't, because the volume isn't the same. It's not the same thing. So, but if you want an indication of direction for the Dow during Globex, obviously watch what the DAX is up to. It's kind of like a little bit of a delayed reaction. Everything that happens here happens in slow motion with about 50% of the strength. So it's not easy to trade, but it's if you want to trade futures in the mornings, it's your best bet. Right, so we'll watch that, see if we can get that to hit TP today. Other than that, nothing else to look at today. Bit crap. Morning, Franco. On CAD 4 hour, can we get a pullback to 105? You could get whatever you like. Don't ask me. Anything can happen. So shallow pullback would be down to 38, which is 106. 105 is all the way down. Blimey. All the way down there. So you're looking at basically an A-shaped recovery on the move, aren't you? Pretty much. Could do. I don't know. But I wouldn't hold it down to there. You know, if you're going to set a target, why set yourself a target, right? If you're getting in short here, just had a reverse alert on this, yeah? There. The structure shifted short there off that double top. Yeah. If you're using a stop loss on this, you stop somewhere up the high. Why target 105? That's just really greedy. It's going to be hard to get to 105. It's going to be really easy to get there. Pretty easy to get there. And that's an ADR. Yeah. If you just went for ADR, you're looking at 4R on it. So, but if you're position trading it, obviously get out when you get out. But I wouldn't go that deep. It could do, obviously. Anything can happen. You're going to need the US dollar to have bad news today, basically. And you're going to need oil to drop today ahead of the oil inventories tomorrow, which is unlikely. So I think you'll struggle to get down there. Morning, pot guider. On which pair do you let the H1 hedge run? All. So it's running on all pairs, everything. That's the wrong account. That's ADR reversals. That's the H1 hedge. Yes, it runs on everything. But you will get, I mean, if you're going to run this, put it on a new account, separate account, yeah, and I'd demo trade it for a month or so, because you're going to get some drawdown on this that's going to scare the hell out of you. Yeah. It produces it's done 34% last month. Drawdown was over 40. Yeah, you're going to get massively drawn down on it because it's a hedging. Yeah, so the whole purpose of this is it goes long and then it tries to get out of that trade. If it can't, it goes short, and then it will always, regardless, every time you bank something, it will be in drawdown on it as well. Most of the time. Yeah, look, we've got 3 longs on there, and a short. Yeah, so when this goes and hits that target on those longs, it will have taken a second short and be in drawdown by 1 or 2 positions already. You are always going to be in high drawdown. This thing never gets out of, I haven't seen it less than 5% in drawdown, and I've seen it up to 40. But the fact that it's hedging means that you are always banking profit as well. That's the beauty of it. So the difference, the way this hedging set file works is it's designed to extract money regardless of which way the market goes and deal with the positions that don't. So the months it makes absolute fortunes, like last month, 34%, is the months where we haven't got a lot of squeezy movement. Yeah. These months, it will go into 30 to 40% of drawdown and bank a similar amount. On squeezy months, it won't go into much more drawdown because it will be constantly doing drawdown control and scaling out of those positions. It just won't bank a lot. It'll have a losing month. But overall, long term, it's profitable. But I haven't intervened in this account at all. So basically just wanted to run it and see what happened on it, basically. Because this is a demo account, it's scrapped all the history, which is really annoying. I didn't realize Forex did this. It scrapped all the history. So even though I select 3 months, I only get last month. Very annoying. I might have to switch broker for these test accounts. Dow's just broken out the lows. Didn't get out new lows on the DAX. We just put an inside bar in. DAX, we just got inside bar. So potentially we are pausing. Just protecting my short on the Dow, just in case this decides it wants to do a pullback. I don't want my Dow to go into loss. I'm just going to break even it. You know what happens when we do break evens? They will break even. Yeah, going to break even only by the looks of things. Going to be one of those mornings. Keith finished the bootcamp yesterday. Good man. What stenting do you have to adjust if your broker uses 00 digits in the DAX? I don't understand the question, Johannes. Morning, Tom. I don't understand the question. What stenting do you have to adjust? Oh, do you mean setting? Setting. There's a number of settings you need to adjust. It's all covered in the manual. Just go and read the manual. Yeah. So there's a big bit, really, really clear. Important note on 2-digit brokers with indices and a graphic to tell you every single setting you need to change if you have a 2-digit broker. Yeah. All in the manual, which is there. Can you reckon to stack buy Aussie Swiss? I don't know what you mean by stack buy, but yeah, I mean it's not a buy, is it, at the moment? Aussie dollar. Sell. They've just come out with lower interest rates than forecast. Not good for the currency. It's bad for the currency. I wouldn't buy it at all, let alone stack any buys on it. Can you take a look at US dollar Swiss? Seems like it's breaking upwards to fill daily time frame gap. I don't look at daily gaps. Don't find them reliable at all. Look, when you're looking at the daily time frame, you are looking at the longer term fundamental picture. Yeah, if it's moved down that fast and that hard, there's a reason. The fundamentals have made it do that. So you will find that you get a lot of orphaned gaps quite often on the daily, but they do get filled. Yeah, as you can see, but that took 636 days, 2 years to fill that gap. Yeah, 2 years. So this is an investment time frame. So don't look at the gaps on it. It's not worth it. Aussie US ADR. Yeah, so all these Aussies are going to get ADRs on them today. Propulsion gaps holding on the DAX. Yeah, I mean, I don't know about the US dollar Swiss at the moment. So US dollar, obviously, we've got the PMI figures this afternoon, which is going to drive this up or down. Then we're going straight into non-farm tomorrow. And then we've got the unemployment claims and the service PMIs, which is the opposite to the manufacturing PMIs, tomorrow afternoon. And then we're going straight into the unemployment rate on Friday. So, you know, anything that I say right now about this US dollar is going to change every single day this week based on the fundamentals. So at the moment, it's looking fairly bullish, the US, isn't it? It's doing okay, and it has been for the last sort of week. It's started to recover from this double bottom down here. But look, long-term US dollar Swiss, do you really want to be buying that? Yeah, and this is all during a period of the US dollar constantly increasing interest rates and getting positive news. Yeah, what happens when the Fed turns around and say, I think we've hit terminal rate, and it actually becomes bearish? Yeah, it's not going to be good. They're going to pull money out of the US dollar and they're going to put it in the Swiss franc because they don't want it in the US dollar, which is going to make this thing come down twice as fast and hard. So I'd be very cautious at the minute with the US. It's been the same for the last sort of, it's virtually most of this year, but for the last 3 months, much more obvious. When we get a negative news event on the US dollar, it collapses. When we get a positive news event on the US dollar, it makes a little bit of progress. But then as soon as it gets a negative news, it's like the University of Michigan comes out and those 500 people they surveyed said they didn't actually fancy the US dollar at the moment, collapse. It's like, sorry, you've asked 500 strangers whether or not they think the economy is good and you've collapsed the currency, yet the unemployment rate comes out as going down and you pump it by half an ADR. The market's got no confidence in the US at the minute. That may change somehow. If the war escalates, for example, this is going up. But, you know, there's all sorts of things that flat on the Dow. There's all sorts of things that can affect the US at the minute. So, which means DAX is rallying. So, all right. God, talk about taking an hour to fill my order. This shows you how much liquidity is getting in the market at the moment. You can probably hear that shouting stop filled every time it's filling an order. I've got 10 contracts, which I've put at the same price. It's only managed to fill 6 contracts. There's just no volume. There's no liquidity. Left me 4 short and pulled back. This market's... there we go. I'm flat, finally. This market's dead today. So pull back into, or trying to pull back into the opening range on the DAX. So hopefully that's a pullback on a short leg, but feels a little bit rotational today. There's no volume. Franco, in the past, I would trade hit loss and move on to next loss. Now you've taught me to wrestle the trade and profit. Exactly. That's what it's all about. Wrestling, good example. We wrestle our trades. We don't let them win. We don't let the market win. We make sure we win. This means we've got to wrestle for a bit longer. When I lose, it's because of my own impatience. Yeah. That's all you got to do is wait. Yeah. You know, if I have to sit here, if I go flat today, for example, let's say the Euro Swiss today pumped and we're suddenly sitting up at 125 ADR, I'm out of that. That was $450 profit yesterday. That's going to be pretty much 1%. If we get there, I'm out on that. If the pound US dollar rallies because the US dollar tanks the PMIs today, I'll get flat on that. If this thing comes down to break even because the New Zealand's dropping off the Aussie, I'll be flat on that. If I have to sit here for a week with no trades on, it's trading. Yeah, you take your trades when the opportunities present themselves. Yeah, you don't try and force a trade. It's one of the biggest losing traits in traders is trying to force a trade. Impatience. Just got to wait. Yeah. Look how many trades there are on all of my charts. Yeah, there's tons. Yeah, they're like buses. You wait for ages and then 2 come along at once, 3 come along at once. Yeah, I'm never short of trades. There's never a month where there's not an opportunity to trade something somewhere every day. But if you sit here because there's nothing happening and go, oh, screw it, I'm just going to go long on this, they will kill you because it's not part of your system. It's not part of your strategy and it's not what you know has worked. I've backtested this to death. I've live traded it for 6-7 years and it works. So I know that if I press the button without that being over that line, got 50-50 shot at the end of the day. Always has, hasn't it? But I know the odds are way less in my favor if I press it when it's not below that line. When it is below that line, rather than above it. On the RSI I'm talking about. So patience. You know, and you're going to have months where you make like 3 to 5%. What, you know, you got to think like the market is your employer, right? You get paid by your employer. If your employer shuts his company for a month because he's gone on holiday and there's no work for you, you don't get paid. That's just the way it is. Some months you'll be busy as hell, like last month, and you'll make 25%. Brilliant. Some months you just won't do that. So just wait. It goes up and down when it wants to. When it doesn't want to, it doesn't. You can then adjust, obviously, which is what we'll obviously monitor with the RSIs. But I think the only thing you're going to get today is Aussie dollar ADRs. Look at that pound odd. We're up, coming up to 125. So again, opportunities. Double top coming up with a monthly high just behind it. But that's only around about a quarter of an ADR away. So you've got twice the reasons for this thing to turn around up here. If we can get a push up to 135 ADR, good opportunity for a short up there, play it back down into that propulsion gap. An unfilled gap that was tested there. Drop down M5. That's probably the trade of the day at the moment. Euro odds not bad either. But again, both of these are counter trend, counter fundamental. So they're high risk, aren't they? But risk is risk. Dax is stalled out a little bit at the open, which is good. And it's flashing back down again. So hopefully in the next half an hour or so, we might get a new leg down on that. Yeah, depressing today. Depressingly slow. Hennas, have you or anyone in the group not been paid out by FTMO, E8 or my Forex funds for anything other than drawdown? No. Well, I not been paid out for anything other than drawdown. Yeah, no. In what reason? What other reason would there be not to pay you? Read your contract. The reasons not to pay you are all in your contract. So if your contract says something and you've done something that is against the contract, then they won't pay you. Go through that contract with a fine-tooth comb. There's all sorts of little rules that you don't know about. Consistency rules, they're all in the contract. Copy trading, it's all in the contract. Read the contract. It's a legal binding agreement between you and that party as a subcontractor. I am a subcontractor of my Forex funds. I get paid through deal as a subcontractor. That is my legal agreement with my Forex funds and EA. Signed a piece of paper. Read your piece of paper. And you will find there's all sorts of things in there, as Brian found out when he got funded with Fidelcrest. Yeah, all of a sudden you can't trade all sorts of news, and you've got to be flat by a certain date to get paid. Otherwise, you have to wait another month. There's all sorts of things in that contract you won't find unless you read it thoroughly 3 times. Highlight what you're confused about. Email support. Clarify it. Because there's nothing worse than getting to payday and going withdrawal and them going, what do you want about withdrawal? You've been copy trading off of an EA that is designed to pass prop firm evaluations. That's all you can do. Read your contract. And ask the questions, yeah? Ask the questions. Amy's in here today. She was working on with another prop firm that have removed the overall daily drawdown limit, yeah? But read the contract. When it gets funded, that limit comes back. So this is the point with all of these firms. It's all about making money out of evaluations. Their business model is the fact that 90% of traders lose 90% of their funds in 90 days. That is a fact in the industry. So if you set up a company and instead of these people trading on demo accounts, you give them a demo account, but charge them $500 for the demo account, you will get the same result for these people. 90% of them will fail. Yeah, that's their business model. So they make it as easy as possible in the evaluation. And then when you get the contract, they make it a little bit tougher to keep that funded account that you've luckily passed the evaluation with a strategy that happened to have a winning run. And that is where they catch you out. But if you know that, you can game the system. There's ways to do it very easily. But you've got to know how to do it, haven't you? You've got to know what your rules are. So read the contract. Very, very important. Same with your broker. Yeah, go and read your broker contract. And then you'll stop trading, basically. When you realize what you've signed a contract for in your broker, you'll pass out. What was that trade I took the other day that I got stopped out on? It was an Aussie dollar, wasn't it? I can't remember what it was. Aussie New Zealand, there we go. Look at that stop loss that triggered on that entry there. Look at where price was when they triggered that stop. Yeah, ADR on this is 78. Half an ADR on this is 39. They stopped me out by spreading the market by over half an ADR. 43 pips they spread by. Just going short on the Dow again. It's in the contract I've signed with the broker. Yeah, it says in the contract that they will aim to fill my order at the price I request. Yeah, if they are unable to, they will fill at the next available price. They, because it's a contract for difference that you're trading, designate the prices. So it's in their total legal rights in that contract for them to execute any order you place in the market at any price they deem fit. Think about news trading. If they want to spread it by 2 ADR at the news, yeah, whatever, they'll do it because they can, because you signed a contract that said, here's £10,000 of my money. When I put an order in the market, do what the hell you like. That's what your contract says in its simplest form. Rule 1, here's my money. Do what you like with it. Don't read your contracts. In there. There's always that clause that allows them to do this because they have a piece of software that has levels on it, and each of those levels has a different dollar sign attached to it, which are stop orders for their clients. So if they spread by that much, they get that much. If they spread by that much, they get that much. If they spread by that much, they get that much. If you had a magic button every night at the swap that you could press to give you a guaranteed amount of money, would you press it? That's the contract you've signed with your broker. You've allowed them to do that, which is why you don't use stop losses. Because if you use a stop loss, you will damn well know every night at the spread, you will get stopped out. Don't use them. This happens in news. It happens throughout the day. How many spikes have you seen on a broker candle and gone, whoa, what the hell was that? And then you've looked at another chart and gone, why is that not there? Because that broker decided he wanted a load of cash at that minute. The others didn't. That's the reason. Nothing else. Nothing happened in the market because you're not trading the market. You're trading a CFD, a contract for the difference in price between the actual market and what your broker has decided to give you as his price. CFDs, not futures contracts. Important you understand how this thing works because it ain't on your side. New Zealand dollar CAD, I'm flattening. Maybe right, maybe wrong. But I'm not going to take a chance on this Aussie dollar collapsing for the next week because of that interest rate and bringing the New Zealand dollar down with it. Because we've also got news coming up overnight on the New Zealand, and if that unemployment rate goes up as well, that's coming down. So it's not a good trade anymore. Don't like it. Small loss, but overall, I'd rather be flat than in drawdown, especially when it's this quiet. GT, I made $500 profit on Sunday. How'd you make $500 profit on a Sunday? The market's shut. What are you selling clothes on eBay? About those massive spreads, how about removing stop loss from 11:30 at night so you don't suffer the giant spreads? Yeah, you could do that. I don't use them, so it doesn't make any difference to me, does it? That's a drawdown. That was a drawdown control position. Nothing I can do about that. I mean, but that's only a third of the position, so it's only a small loss. But yeah, you can remove your stops overnight. That's not a problem. But don't do it on a night where you've got a news event coming, right? So if you're going to remove your stops, if you use stop losses and you want to remove them overnight, fine, do that. But don't do it on an Aussie, a New Zealand, or a yen pair, because if you go to bed and wake up in the morning, and there's been news that has shifted it by 200 ADR against you, yeah, right? Let's say you had a 1% stop loss there, and you woke up and price was there. That's 5% loss instead of 1% loss. Yeah. Don't do it. Fed up getting stopped out on this Dow. Got to use stops though. There's too much money. So short on the Dow again. And the Dax is putting a new low. So nearly TP on Dax on the ORB. That's 2R on the opening range. There. Come on, Dow. Collapse with it. It's still amazing to me. So much money being made managing demo trading. Only for nothing. I know, it's crazy. It is crazy. It's the reason people do prop is because they want the riches. It's all to do with the courses that sell you the Lamborghinis. The whole market, everybody that does this is focused on getting a Lamborghini, the big house, the big car, the load of cash. So what the prop firms do is set up with 100 grand or $250,000 account, because the only way you can make that sort of money is with that sort of money. But people can't trade a 5 grand account. Why on earth do you think you can trade a 250 grand account? It's the same thing. It's just there's way more stress involved than there is in that. So I know I can't trade at the moment, but if I had $250,000, I bet I could make some money. No, you can't trade at the moment. You still can't trade, and your stress levels are 10 times higher. Good luck. What's the one thing that kills people? Stress and psychology. You can't do that, and you expect to do that? Nuts. That's why all these EAs that promise to pass your proper valuation for you. I had a guy contact me. I have people contact me quite regularly on this, actually, but I've just passed an evaluation. What strategy would you recommend I trade? What do you mean you just passed an evaluation? Trade the strategy that you passed the evaluation with, obviously. No, that was an EA. They passed the account for me. I don't know how to trade. It's like, you've just spent $2,000 or $1,000 on an EA to pass an evaluation, to give you a load of cash to do something with. It's like an airline pilot. It's like going up in an airline and then the pilot going, right, I'm off to have a coffee. Fly the plane for me. Never flown a plane in my life. How do you think that's going to go? It's nuts. It's all about making money. Dow's not able to get low. We're really struggling to get, although we've broken, we're struggling to get any decent momentum today. So I'm just watching this candle. We got 30 seconds left. I might take half of this and just leave the second half running. Because it's too close to TP, you know, for the sake of that amount of movement, which is 11 points, I'm not going to sacrifice $1,000. I'm just going to bank 500. It'll probably hit TP, and if it does, it does, but I'm just going to bank half. And then break even stop, and then we'll see where we go. I've got a 4R target, which is down to ADR, so we'll see if we can get that drop, but it's guaranteed profit on the morning. So more than I can say for the Dow, although it is starting to drop. NASDAQ's just tapped straight into that weekly low, look, in Globex. What's that? That's the high from 3 weeks ago. Look at that. Look at how well that high from 3 weeks ago has held up. Look. Just formed that barrier there. Algorithmic. Even the Forex pairs, is the Forex a CFD? Yeah. Everything you trade with your broker is a CFD. Yeah. If you're not trading futures, you are trading either CFDs or spread betting. Yeah. Spread betting is basically gambling. It's just another version of the market. But if you can't trade anything but CFDs. You either direct access the market through the futures market, or you trade a CFD, contract for difference. Yeah. Think about the I mean, well, you basically don't have an option. That is how you trade. Yeah, you trade a CFD. That's why it's called it's a contract for the difference in price. Yeah, so the broker gets quoted a price from the dark pool. Yeah, there's a pool that the orders can be farmed out. So there's quotes coming in at a level. Yeah, the broker sees that. He then quotes you a price higher or lower than that. So whatever button you press, he makes money on that spread. He also makes money on a commission. Yeah, and overnight he makes money on a swap. So the broker's job is to get you to press these two buttons here. Every time you press that, they make money. Yeah, because they are getting a price and they are offering you a contract for the difference in that price. Yeah. And it's a legally binding contract, but that price is up to them. So when you go long here and you put a stop there and this thing comes back down to here and starts to push up, they can expand the spread to give you what you asked for. a contract for the difference in price between what's quoted by them and the market. The fact that that makes you a loss means nothing to anybody but you. To them, they've fulfilled their contract for the difference in price. You've got to understand what you're trading. You're trading your broker's account. Your broker basically is taking the opposite side of your trade until you start becoming profitable. Your broker, every time you hit that button, literally when you press buy, he presses sell with his own funds. Yeah, because he knows that 90% of traders lose 90% of their money in 90 days. So if he does the opposite to what you do, what's he going to do? Every penny that you make, or every penny that you lose goes into his account. Plus, he also makes a spread and a commission and a swap on you. That's the broker's job, yeah, to give you access to the market, and he will charge you a fee for that. But he also has control over all of your money and your price because you've signed a contract to tell him to do that. Everyone's now going, I don't want to do this anymore. But don't use a stop loss and you won't have the problem. It's horrible when I first found that out as well. That's where you either give up or you stop using stop losses. What I teach. 1, 2, 3, 4, 5 days sideways on euro pound. Looks like it's testing a level with passion. Yeah. So this area here obviously is been pretty decent support multiple times. Euro is long, but then again, so is the pound. And I would say at the moment, the pound has probably got more chance of rallying this week than the euro has. So bear in mind, you're getting into a trade here 2 days before the largest news event of the month on the pound, which is the interest rates. And the interest rates are forecast to rise, which will be bullish pound, bearish euro pound. And if Bailey comes out and says, we anticipate inflation being worse than expected based on the figures, therefore more easing will be required, that means interest rates will go up higher, which means the pound will become more bullish. And this thing will be down at 200 ADR. So you will be opposite side. Unlikely we'll change the interest rates, but Bailey also could talk the pound down by saying that interest rates are only going to go up by another 0.75%, in which case we may get a bearish move on the pound, which will be bullish. But right now, this is going sideways because no one's interested in getting into the pound ahead of the rate. So what you're taking here is a trade that is unlikely to go anywhere until Thursday. But short term, M5, take it up to that high or that high. You've got a chance of getting up to there, definitely. Let's go Dow and Dax. There you go. So hit my TP. Would have hit TP if I hadn't taken it off manually on that candle, but I'm going to risk it. So see if we can get an ADR hit on that today. It'd be nice. Nice little drop. So if you don't trade CFD, will they not be able to mess you with the spreads? No. You can't trade the Forex market though, AZ. There is no such thing as a Forex market that you can trade. In futures, you can trade individual currencies, but there's no currency well, there are currency crosses in futures, but no one trades them. So in the futures market, you trade things like the 6E. Thought they had a list of instruments, probably in there. I don't know, but you'll find a list of instruments. There's lots of instruments you could trade, but you trade individual currencies in the futures market. So you will buy the pound futures, or you buy the euro futures. So the CFD exchange rate is a little tool created, basically. It's basically there is a market for it, but it's not something you really have direct access to very easily at all, which is why everyone trades CFDs. If you wanted to trade, going to the big details here, but if you wanted to trade the actual Forex markets, every time you buy the pound US dollar, for example, you will be buying a 10,000 pound contract, right? So you have to pay the tax on that 10,000 pounds. Yeah. So if that goes up to 20,000 pounds, for example, that contract, you have to pay the tax on that, which is why it's not financially viable to do it. Institutions do it, but you can't do it as a retail trader because, and this is why CFDs and spread betting was created, because it gives you access to the market at a low cost price. Like, for example, in the futures market, which is why everyone trades prop. You can't hold a futures contract overnight unless you've got $10,000 in your account, because the overnight hold costs, if you look at the CME costs, exchange fees. Why is it PDF? Why is it not just a website with this information? Really? A spreadsheet? That's not even the overnights, is it? I don't know. It's in here somewhere. But your overnight rate, basically, to hold overnight on a futures contract, depending on the contract. So I think it's one contract in the S&P or the NASDAQ will cost you $540 to hold overnight, something like that. No, I don't know where I'll find it. Overnight financing, maybe it's sitting. I don't know. Anyway, it's too expensive. That's all you need to know. It costs too much money to hold overnight, which is why prop firms all require you to be flat by end of day. Because if you were 10 contracts short on the DAX, on the NASDAQ, for example, at the overnight, they would have to pay the CME, and they would have to have enough liquidity in the account to cover all of those contracts expiring, which is tens of thousands. So this is why CFDs, this is why the brokers industry exists, because it's bloody expensive to trade. Same as stocks. That's why a lot of people don't trade the stock market, but you can trade a CFD stock. But if you actually trade the stock market and you want to buy Apple, you're going to need a big pot of cash, like tens of thousands of pounds, just to buy a couple of shares in Apple, because that's what they're worth. So the CFD is a leveraged product that allows you to get in, and obviously they need to make money along the way, which is how it works. It's very complicated, but at the end of the day, it's a cost of doing business that you cannot avoid. You just have to live with it, unfortunately. German PMI and unemployment rates out, are they? Forecast. All forecasts, so slight miss, nothing. It's yellow news. It doesn't really move the market very much. I'm going flat on the Dow. The Dow trade. It's $875 this morning. That move. We just tapped in on the DAX to yesterday's low. Sorry, not yesterday's low. Yes, it is yesterday's low, sorry. On the DAX, that's where we've got the limit order bounce. So I'm just getting out the Dow in case the DAX bounces here, which is quite possible. The Dow will probably get a little bit of a rally as well. So just exiting on that low. Got a very, very small gap fill there, look, on the Dow. The DAX, rather, in that propulsion gap. May work as a target to the downside. Euro Swiss is pushing. I'm going to go flat today, aren't I? This is going to be weird. Don't do flat. Regarding brokers, is an ECN broker taking the opposite side of the trade? ECN is a connection method to the market. So an ECN account is just a faster transaction. All these brokers, yeah, when you go onto a broker's website, there's lots of different types of, you got prime accounts, you got ECN accounts, you got cent accounts, yeah. There's very little difference in any of these at all. When you are on your broker's A book or B book, depending on what they class it as, yeah. So let's say the A book is the first one you go onto for simplicity's sake. They take the other side of your trade. Doesn't matter whether you sign up with a prime account, an ECN account, or whatever. Yeah, they take the other side of your trade. So the assumption in a brokerage is when a new customer comes on board and deposits less than X thousand pounds, they are probably not very good. Yeah. So if you come and you put £1,000 in, or £3,000 in, £5,000 in, you're dipping your toe in the water. Yeah. Because you're not going to make enough money to live on dipping your toe in the water with £5,000, because a successful trader is going to make 10 to 15% a month. So they know that you can't live off of that. So you're gambling, aren't you? You're having a go. So they will instantly assume and take the opposite side of your trade, because they're expecting you to lose that money, as 90% of customers do within 90 days. Yeah. So when that account after a month hasn't gone down, has gone up, you'll get monitored. If in month 2 that account's gone up again, they'll do a risk analysis on the account, and they may well flip you over to the B book, because they will have lost money on you. Yeah, because if they're taking the other side of your trade and you're making money, they're losing. Yeah, they've still made money on spread swaps and commissions from you, but they're losing money on the A book. So they switch you over to a B book account, and they'll monitor the B book account. If the B book account starts to lose money, you get flipped back to A. The execution time they offer will be based on the type of account that you have, and the spread that you get, or whether or not you get charged a commission or not, will be based on the type of account. The leverage you get will be based on the type of account. None of these are any different to any other. Oh, I've got an ECN account. Oh, I've got a prime account. This is premium conditions. It's exactly the same. Order execution on my prime account is no different to my ECN. That's it. You've got a pro cent and a pro account, yeah? The floating pips are 1 to 3. The floating spread is 1 to 3 on that. On this, it's from 0. Yeah. Notice the word from. Always from, because it's the same. You don't get any better trading conditions on any of these accounts, really, at all. You get a maximum leverage of 2,000 on that one, as opposed to 500 or 300. Yes. So what they're saying is, how much do you want to gamble? That's it. Doesn't matter which one you choose. Think about it. As a position trader, I've been sitting here in these positions now for these Euro Swiss are probably 2 weeks, 3 weeks now. 1, 2, 3, 4, 5, 6. 16 days, 3 weeks. Yeah. Does it matter when I press this button on all of these, or when the EA gets me into all of these trades? Does it matter what the spread is? in any shape or form. To make the blindest bit of difference, is it? When I'm scalping, the spread is impossible to not be as tight as possible. It has to be the very tightest, best execution trade conditions possible, because the market, when I'm scalping, is going like this, tick by tick. At the open, it's going bang, bang, bang. I've got to be executed with a tight spread within milliseconds. Position trading or swing trading, I couldn't give a monkeys if I press the order there and they execute me 5 minutes later. In the grand scheme of things, it makes no difference at all. I'm expecting this to go up at some point in the future. If you fill me there or there or there, I couldn't give a monkeys. I'll get out when I've got profit. Yeah. When that goes green, I'll move it over there. That's what I do. So it doesn't matter what my execution time is, does it? That's how they work. So they will monitor you. And what you will find a lot of the time is you will be able to identify. So with Axie, I got an email after 2 months of having my Axie account saying, hi, I'm really sorry. We're going to have to stop supplying you this account. We need to class you now as a professional customer. I was like, what do you mean a professional customer? Your trading account is working the same way as professional clients. What you mean is I'm profitable, have lost you money, and you need to charge me more commission. That's what they were actually saying. And they were like, we've got to sign you over onto this type of account. They moved me over to a different account with different leverage. Why? Because I lost the money. That's what happens. So under the hood, they don't need to worry about 90% of their customers, because 90% of their customers are going to lose all their money. The 10% that actually make money, they deal with in a different way. And they still make money out of me as commission, spread, and swap. Yeah, they just don't make money out of my losses. The way it works. Your access to the market, what prices are quoted anywhere in the world, has got nothing to do with anything. What they quote you on that screen is what you see. Somebody posted in the Telegram group the other day, I've got 2 accounts. Why is my ADR different on this one to this one? Because that broker spread by that much at the swap, and the other broker spread by that much at the swap. Therefore, your ADRs are at different price points, because your brokers quoted you on exactly the same instrument, 2 totally different prices at the same time of night. You can't do that. If the market's trading there, the market's trading there. You were seeing the market price, that's what you would see. You're not. You're seeing that. You're seeing whatever the hell these guys want you to see. You're seeing through one window. If you have 4 windows open with 4 different brokers, you'll be shocked. Some of those candlesticks, you'll go bullish on one and bearish on the other. Someone emails me and says, why did you not get into that trade? Well, because there's been no reversal alert. Yes, there has. No, your broker's shown you that the price has gone up. My broker hasn't. Because your broker's got a different contract price than I've got. That's literally how it works. Critical you understand it, because you need to know what you're trading here, yeah, and who's on your side and who isn't. God damn it. Dow's still coming down. There's the DAX, which is good. Still got the DAX short. I would rather trade cent accounts to be more disciplined. Yeah, you can do if you want to. The trouble with cent accounts is you're seeing a warped view of your life, basically. If you're leveraging up to 2,000 leverage, you're trading numbers which are making your life unreal. So if you're focusing on percent, if you're position trading on a cent account, it's not actually that much of a problem, because what you're actually seeing is a percentage gain. If you're focusing on the Trade Manager Dash and you're focusing on your percentage gains, it doesn't matter if you're using a cent account or not, because if you're not looking at the money. But if you're looking at the money, the numbers that you will see on a cent account, for example, will be 6,300 or 63,000 or something ridiculous like that, where it's not. You're better off trading with a proper account, but personal choice. So when they say it's a $7 trillion a day market, are they arriving at that figure from CFDs? It's the money that goes through the markets into bank. Exchange. It's just the money that goes. The other thing you need to be aware of with this and the futures market, the big difference is in the futures market, everything goes through a centralized exchange. Yeah. Chicago Mercantile Exchange. So every time I place a contract in the Dow, I am placing a contract in CME. Everybody in the world is seeing my contract move through that market. My volume goes into the volume profile. On here, when you look at the volume, you are seeing the broker provided volume only. So this here, down here, euro odd 125, so the odd's still going down. This here is how much volume that broker, RoboForex in this case, put through in that hour on the Euro Swiss. Go and look at the volume on another broker, a smaller one like Darwinex or someone. That will be different volume. It might be up there, it might be down there, because all volume is a percentage of an average percentage volume that goes through the instrument. Yeah. So you're going to see a different volume going through. It's not centralized. So everything that goes through the markets when they quote these numbers like a $7 trillion a day market, that's what is being reported. There is what are called OTC transactions interbank as well, which are called over-the-counter transactions. And this is the transactions that don't go through the market. You'll never see them on these charts because Barclays and HSBC have got two large transactions to conduct. It's easier for them to go over the counter and go, I'll do this one that way, you do that one that way, we both make money, than it is to try and farm it through this market because the orders are too big to go through and find liquidity in the market to fill them. So you never see OTC transactions. On the stock market, everything has to go through there. There is no OTC. In Forex, there's OTC, over-the-counter transactions. So you don't even see what goes through, everything that goes through the markets in here. So when you see those big news spikes going in, there may well be hundreds of millions being transacted behind the scenes interbank, where they can just go, it's cheaper for us to transact this way. I'll give you this 100 million, you give me that 100 million, and we'll have a contract with each other to swap them back. Therefore, they just pay each other's fees rather than all of the other fees that go through CME and other things like that. So they won't go through the futures market. It's an incredibly complex machine, but all you need to worry about is this. Yeah, if you sell it there and it goes down to there and you get a green thing, go there. That's in the simplest form. That's all you need to know about how everything works under the hood. You've got to understand how it moves, but the actual mechanics of it are irrelevant because you can't control it. There's absolutely no point in you trying to learn about things that are out of your control, like the markets, which is US dollar CAD. Okay, so there's the first ADR that's not Aussie related. US dollar's rallying or the CAD is dropping. Aussie CAD's not a good gauge, is it? I'd say it's probably a little bit of both. So it looks like the CAD is dropping ever so slightly because everything's rallying against the CAD. It's Euro US dollar, so Euro US dollar and pound US dollar are coming down. So we've got a strong US dollar and a slightly weak Canadian dollar. So ADR hit to the upside on that one today. Again, we're at top of range. But again, you're taking a trade straight ahead in news. V-shaped recovery, so it might well just leg back and go. If the news is positive this afternoon. That explains why the Dow's come down so hard. The US dollar's rallying. Obviously, the indexes do the opposite. And again, the mechanics of this, yeah? This goes down because that goes up. As the dollar becomes more expensive, stocks, people buying the dollar take money out of the stock market, you know, and vice versa. It's all intertwined. But there's too many mechanics to learn. And if you spend your entire life learning mechanics, which I have done, but not because I wanted to, just because I've picked it all up over the years, you get to this point where you go, none of it makes any sense or isn't relevant to me right now. Yeah, because when I buy this thing, whether or not there's a load of OTC transactions going on, there's a load of volume going for the futures market, or whether my broker's quoted me a price that's good or bad, I don't have any choice or control. You just got to hit the button and deal with what you get. If you get stopped out on a big spread every now and again, cost of doing business, nothing you can do about it. You can phone your broker up and scream and shout at him if you want, but then you've got the hassle of going through and finding another broker. Much easier to stay where you are. Just accept it. If he does it to you every bloody night, yeah, jump ship. But other than that, you haven't got any other routes to market. This is it. So deal with it. That's all you can do. Does that make euro pound good for hedging for the next couple of days? I don't know. I don't hedge. If you think you can hedge, do it. I just don't do it. E-mini NASDAQ overnight margin is 18,480, Dow 8,800, S&P 12,320. Thank you, Jerry. That's what I was trying to find those figures for you earlier. So if you want to hold a single S&P contract overnight, you need $12,000 in your account to hold. I assume that is one contract price. Yeah. So if you want to hold a Dow contract overnight, you need $8,000 in liquidity. So let's say you're 3 contracts, like I've just gone 10 contracts short on the Dow this morning. So I'd have to have, if I wanted to hold that 10 contract overnight, so let's say the Dow, right? I got in short here. It pushes down, it pulls back, it pushes down, and I find it miles down there this afternoon, and I'm break even on it, and I'm sitting in 15 grand of profit. If I wanted to hold those 10 contracts overnight, I would need $88,000 in my account to do an overnight hold. This is why the prop firms do not let you hold overnight. You have to be flat by market close. And if you're not flat, they will flatten you, because they're not going to take a risk on the Dow gapping up above your entry price short, and all of that having to be realized as loss. It's too expensive. And again, cost of doing business. Banks can do this. This is what you're seeing here in the COT report. Yeah, this is banks holding the futures market. They're holding the Australian dollar short. 70% of the market is holding, I don't even know what the Aussie ticker is, but you got 6E, for example, is euro. They're holding 77% holding the euro long, but to hold the euro long will have an overnight rate. So they have to have enough money in their bank account to hold X number of contracts long on the euro overnight. It costs them absolute fortunes. It doesn't cost them anything, but they need that liquidity there. It's the financial markets, it's banking. Yeah, everything's expensive. Why is August considered a low probability trading month? Because everyone's on holiday. Simple as that. There's less volume, less liquidity, less trading. It's also sort of bang in the middle of a quarter, but that's not really the reason. It's summer trading, summer months. They're on holiday. Just is. It's a quiet period. Always has been. 3R. Trailed 386 into profit, so guaranteed $1,000 today. No, not guaranteed $1,000 today. Oh, one month. Near enough $1,000. But if we hit that 4R low, that's 1,500, so that'd be $2,000 morning there. And 825, 875 on futures. Decent morning. If it happens. Still cross about making all that money yesterday and realizing I wasn't actually on my account. That's annoying. I learned that from a lawyer friend. One word in contract can change everything. Yeah. Contracts are massively important. Yeah. Nobody ever reads them, do they? I never read anything. I don't read any contract. The only contract I ever read is I've read my contract with my broker just to confirm what somebody told me about my contract for my broker. And then I was like, well, what can I do about it? Do I want to trade? Yes. There you go. If I want to trade, I have to sign a contract with my broker. There are no other options. Or you trade the futures market. And if you trade the futures market, as we've just said, you're going to need a pot of cash. So CFDs is what you do. And the only other contracts I've really read in full is the one with the prop firms, because they will do anything to not pay you, including not tell you about what's in there until you ask for payment. And then they will go, read your contract. And you go, the only thing they make clear on the prop firm websites is how amazing the evaluation rules are, not what you've got to do when you've passed. We pay out in 2 weeks, but you've got to have traded for 5 days, made a minimum of $10,000 in profit, and you have to be flat. That isn't on the front end of the website. It is in your contract. Clever. So you say when you're trading $1 million account, would you trust the same CFD brokers that you use right now? You don't have a choice. What choice have you got? If I was trading $1 million account, I wouldn't be doing this. If I had $1 million, I wouldn't be doing this. Just putting it out there. If you're a millionaire, would you want to sit in front of a computer and watch candlesticks go up and down all day? Or would you rather be on holiday 6 months of the year? I don't think I'd be doing this. Aussie US, 125 ADR. That tells you how many millionaire traders are out there, yeah? All these people that say, millionaire, I'm a millionaire. This guy, one of the guys out there at the moment that's selling courses, is a millionaire trader. No, he's traded $1 million in volume. Big difference. $1 million trader. Yeah, I can trade $1 million as well. I can go short 100 contracts in the Dow right now and trade $1 million contract. Doesn't make me a millionaire, does it? A millionaire trader. Just read stuff. Read into stuff. Smoke, mirrors, all that stuff. Why did I get out of the Dow? That was too close on the DAX. So there's my TP. There's where the price closed. We are 2 hours in. I missed TP by 2.9 points. So I am moving my stop above the high of that candle. Cancelling that take profit. And I'm going to trail by 21 points and take what I get. I'm not having that. I've seen it too many times where it doesn't hit your TP and then it pops all the way back up there and you lose $1,000. So again, we were talking about the EA yesterday and what use EAs are. EAs are great for getting me into these positions, using the market, using the opening range breakout EA. Beautiful. Got me in. Yeah, got me TPs in place for me, did all the order processing, moved me to break even, does everything I wanted it to do. It can't see, well, it can see that I'm that far away from TP, but it can't make that decision. Trader, not an EA. You've got to be able to watch this thing if you're going to use an EA as well. I'm long GA from yesterday. Would take TP at the highs. GA. We've got some 14 RSIs lit up now. If you're long, yeah, I would probably get out there. Watch price action. Yeah, so you're 125 ADR. Yeah, we're 125% beyond our normal range. However, we are off the back of an Australian dollar from under fundamental downshift. So this could go way above. But watch price action here. Yeah. If you suddenly see a load of limit orders trigger, same as this, look. Look at the previous high on the 5-minute chart. One just coming up, isn't it? 93,376. So look what happened when it hit that, right? Hit it. Big bearish engulfing. M pattern reversal. You didn't get a reverse alert, but you would have pretty much got a reverse alert there. If that made a new high, you would have had a reverse alert there. But doesn't matter. M pattern reversal off the high. So watch it when we get here. Yeah, we're here at the moment. So watch it when we get here. If it does that, doesn't mean it's going to do that. It means that limit orders have triggered at the high. There will be limit orders sitting there waiting to trigger. It'd be very unusual if it didn't get a reaction at that. However, what happens after that is what you want to watch. Is it going to retest it and get rejected again? Meaning there is an iceberg limit order sitting there. They are adding more orders back in as the buyers try to break through the level. If we then break a low and you get a reversal alert, that tells you that the sellers have just taken control at that level, which is exactly what they did last time. That's a reason to get out. It could hit this level, yeah, bounce, and then scream through it and go up to 200 ADR today because the Australian dollar interest rates came out at 4.1 instead of 4.35. Don't get out just because it gets to that level. Get out when you see the market reject that level. You could get out at that level with that much profit, or you could get out of your trade with that much profit, having a confirmation. So the decision you need to make is, how much is that worth to you? And is it worth, are you happy to get out there? Or is that really all you're interested in? If that's all you're interested in, there's your answer. Otherwise, I'd wait for confirmation. Yeah. There's a reversal alert right now. So if we hit this level and bounce, that's your confirmation that it's rejected. If we hit this level, bounce, push up, make a new high, and then break a new reversal alert up here somewhere, there's your confirmation. Yeah. This is what the reversal alerts indicator is for. It's to show you when the other party's taken control of the market. If they don't take control of the market, don't get out, because the buyers are still on side. Don't forget, this is a fundamental, yeah? The Aussies have put their interest rates up by what we were expecting. The market is now having to readjust its Aussie dollar positioning because it was expecting to get a better return. It's now not. So it needs to take some of that Aussie off because it's not going to earn as much money on the overnight rate and the Aussie. So it needs to take that away and put it somewhere else to balance the books. So this thing could just do 200 ADR because they're just going to continuously sell the Aussie back out today. We don't know. However, if this, there you go, Aussie CAD ADR. So all the Aussies now ADRs. No, they're not actually. Sorry, that's RSI. Put the right dash up. So no, they're still not actually. Aussie, New Zealand, and Aussie yen haven't hit yet. Aussie yen obviously is a little bit different, but Aussie, New Zealand, remember I said earlier, Aussie and the New Zealand will move together. So the reason the Aussie New Zealand hasn't hit ADR yet, and is quite often the last one to hit, is because as the Aussie dollar drops, the New Zealand dollar drops. Therefore, this is much harder to get to ADR when you've got two things going the same direction. One of them will be stronger than the other, but it makes it much more range bound, which is why you don't get the ADR hit. That New Zealand CAD. Yeah, glad I got out of the New Zealand dollar CAD. That New Zealand dollar is being dragged down with it. So but we've got news coming up on the New Zealand dollar tomorrow, which could rally that. DAX, I'm out. Flat. Yeah, so there's that level, TP. Pulsion gap, fill, double bottom, bounce, limit orders. Yeah, lower the session, limit orders, lower the day, limit orders. Always find limit orders at the highs and lows. You always get a reaction at the highs and lows because there's always orders placed there. They will always trigger. Whether they work or not will depend on how many people are going the other way. Yeah. So right now we've limit order triggered off the lows. Doesn't mean it's not going to go down still though, because if there's more sellers in the market today than there is those limit order triggers, it will still do that. But this is where the buyers bought up last time. If they're going to do the same, we might find that we get a sudden large participant enter and drive the market back out. Interested in what's under the hood? Would you recommend a first read? Not really, no. There's too much under the hood. It's not a simple thing. Like I say, you know, like with fundamentals, if you want to learn about fundamentals, do the course by Anton Creel. He's the guru of fundamentals. But at the end of the day, if you're trading short time frames, fundamentals mean nothing. So only trade that if you're trading high time frames, long-term swings. That's what he does. He's a banker. He does scorecarding. If you want to learn how the brokers work, there's plenty of videos out there on how brokers work. If you want to learn how the banks transact, there's lots of information out there on how banks transact. There's no central source on everything. Baby Pips teaches you all the basics, but it doesn't teach you all the bits underneath because you don't need to know them. I like to know it. I'm analytical. I'm a programmer by trade, so I like to know how everything works. I have to know how everything works because if I don't understand how it works, I can't fix it. I have to know everything. Just me. If you just want to make money in this market, though, you just have to understand that you can't control it. That's all you need to know. If you can't control it, then you can't find a system or strategy that is ever going to be reliable to an extent where it's going to make you consistent money. So the only way you can make money in this market is by waiting for the market, which is what I do. So, it's, but you have to understand how, I think the thing that you need to understand, the most important thing to understand is how the banks make money. That's the key. For me, anyway. When they've pushed, they have to pull. The reason for that is because they make money on that. So this is what they make money on. They don't make money on that. They make money on that. When that does that, they make money on that. When it does that, they make money on that. When it does that, they make money on that. When it does that, they make money on that. Market structure. So when you understand how they make money, you know what's coming. You can't predict the future. You can't time the move, but you know it's coming because if they don't do it, you know they won't make money. And what do banks never not do? Make money. Who was it this morning? Who did we just have earnings on this morning? I think it was HSBC. I think it was 16 billion. Q1 2023. Uh, 12.9. First quarter, 12.9 billion. Yeah. Yeah. Banks do nothing but make money. What do they do with all of your money? They put it into the markets and drive the markets up and down using their money. They have the money to move the market up and down. So when they move it up, they have the market power to move it back down again. So what they do is they take the market in one direction by buying it, and then when they've got enough money in one direction, they sell it, and that's what that comes from, that movement. In the markets, they obviously make money out of customers paying monthly fees for bank accounts and all that other crap that they do, and commissions for commercial transactions, etc., etc. But at the end of the day, they make money out of money. So if you understand how they make money, you know how this is going to move because you can see what they've done. This is what these blue lines are. These are bank orders. Yeah, because no one else in this planet has enough money to make a candlestick go down apart from the banks. So when it moves down very hard, it's the banks selling that, whatever it is, instrument, money, whatever. It's an exchange rate. It's a stock. It's a CFD. It's a index, it's whatever it is. It's the banks moving something fast and hard in one direction. After they've done that, they come back to the level. That's why these boxes are all grey, because when they pushed that order there, they had a massive sell-in. To get out of that transaction, it has to come back to level the books, and profit has to be made. So when you know that the profit is going to be made from that previous move, you know where it's going, don't you? So these lines predict the future. But when you have a line above and a line below, it doesn't help you in any way, shape or form, does it? You don't know which one they're going for, and you don't know when they're going to go for it. But if you know they're going to go for one of them, you know that if you're wrong first time, you're going to be right the second time. So all you've got to do is get into the market and wait. Patience. Simples. That's what you need to understand. That's the mechanics you need to understand. It goes up and down. It's random. You haven't got any control. Press the button, wait. The only way you can wait is if you press the button with a small enough amount that you don't blow your account while you're waiting. That's trading. That's what the banks do. Simple as that. Really is that simple, isn't it? When you think about it. If you've been in here for any period of time, you'll have heard me say it pretty much every day. Odd futures, A6, that's it. I don't trade futures. I should be able to tell you that. I've got a futures platform open right here. I should be able to tell you exactly what that is. All the futures, because I've got them here. But yeah, if I just type 6 in, it'll give me more, won't it? Yeah, so we got 6E is Euro, 6J is Japan, 6A is Australia, 6B is British Pound, 6C is Canadian, 6M is Mexican. Yeah, there you go. So there's your futures market. They all start with a 6. Don't actually know why, but they do. Again, haven't bothered to look at it. Don't care. Doesn't make any difference, does it? They call it whatever they want. It goes up and down like everything else. To be honest, I'm a little confused. Why wouldn't you want to trade $1 million account? Because I'm a millionaire. AZ, if I gave you $1 million right now, what would you do with it? Would you work all day, or would you use that $1 million to just live? I don't know about you, but if I had $1 million right now, I wouldn't have to work again. I wouldn't have a mortgage, and that $1 million would see me through for the next 30 years. And I'd live very comfortably off of it. Why would I want to risk it on a market? Yes, I could return, but I'd have to work. What's your goal in life? To work until you're 70 or to retire when you're 55? I know what mine is. I'm only 5 years away. So, yeah. If I had $1 million now, I could accelerate my plan a lot. Yeah, I could accelerate my plan. But I can't get hold of $1 million. I can't get hold of 100 grand. I can't get hold of enough money to do it. I could take out a loan, but what's the point? If this was to go wrong in any way, shape, or form, you'd have a problem, wouldn't you? Actually, Amy's 56. She's missed it by a year. All the people I know in this industry that are consistently successful are all over 40. I've never met anybody under the age of 40 that does this full time. Think about that. People don't start doing this until they have kids and they really need to make some money. That's when they start looking into, I need to make some money. And that's when you start looking into this. You don't do that till you're 30. It takes 10 years to master it. Bizarre. But true. Tell a lie, actually. David was 34, I think. He does make money. One guy I know. He does make money, and he's under 40. That's not true. I told a lie there. He's the only one I know, though. So all these people, all these gurus you see out there that are selling courses and doing YouTube videos that are still in their nappies and own Porsches, hasn't come from this. It's come from daddy, or from the lottery, or something else, or a business they started and sold for X, or there's something else behind there that's made that money. It's not from trading, because I don't know. No one else puts their P&L out there, do they? How would you know? Maybe I'm too risky. But if I had $1 million right now, I'd put at least 300 grand towards trading. Yeah, well, that's fine. Yeah. But you just said, AZ, if I had $1 million account, why wouldn't I trade it? Because it's too much. 300 grand. Yeah, I might have a go at that. I would have paid off my mortgage. My income wouldn't change from what it is now, but and I would up my, obviously, account to make more income. Possibly. But do the maths, right? I don't know how old you are, AZ, but do the maths. It depends how long you've got left. Really, at the end of the day, I'm not old. I'm about to turn 50, and I'm absolutely fit as a fiddle. No problem. Everybody in my family lives to 80 plus. Don't see any issue with another 30 years. Divide 1 million by 30. Do the maths now. Look. 1 million divided by 30. That's an income of £33,000 a year, tax free. 33,000 a year, tax free. Could you live off 33 grand a year quite comfortably, tax free, with no outgoings? The only outgoings you got are food and your rent. 33 grand a year. That's assuming I live till 80, right? And I've spent a lot. And I could also downsize my house and put another $250,000 easy in the bank. Easy. And retire. Or I could sit in front of this screen with a bigger account for another 3 to 5 years and then retire even more comfortably. But, you know, that's your choice, isn't it? Everybody's got a different goal in life. I've got kids which are going to leave home in 3 to 4 years. That's why I'm looking to retire at 55. When they're going to uni, I'm going to retire. Plan. You're 24. Yeah. Well, if you're 24, then you can't retire on 1 million, can you? You've got to buy a house, yeah? That's going to take you 30 years to pay for that. Especially at the moment. Probably more likely 50 years. My goal was always to retire at 50, but here I am, almost 60 in skin. Yeah, exactly. Everybody's got a life goal that is never achieved. I have the luxury, I think, and this is the beautiful thing about trading. The guy that really broke the back of trading for me and made me get this thing was over 60, retired. He'd been trading for 30 years, and it took him over 15, 20 years. I don't know how long, probably over 20 years to become profitable, to crack it. And it took somebody else that taught him what he needed to know after 20 years of trying. And that guy was retired as well. What it seems to be is the people that crack this get to retirement and then pass the knowledge down. But it takes so long to actually get that knowledge under your head and understand it that you don't actually crack it until you're retired. And then what you can do is you can trade at your leisure and make 2, 3, 4 grand a month quite comfortably, like this position trading, with very little risk. And you can pay yourself a pension, because my pension's not worth crap. But I could easily look at the charts twice a day on the 4-hour chart in my retirement and easily bank 5 to 10 grand. That's a big pension. If I wanted to. But that's the thing, isn't it? What do you want to do? There's always ways and means. At the end of the day, there's very few people that can retire under the age of 70 now, because some people's mortgages are going to expire when they're 70. Imagine working until you're 70 just to pay your mortgage. That's the reality in the UK at the moment. A lot of people can't even get a mortgage, so they have to extend their mortgage 30, 35 years. Yeah. You don't start earning enough money to get a mortgage until you're in your 30s, most people. Yeah. So if you got a mortgage when you were 30, you're probably not going to pay that off until you're 65, if you're lucky and it doesn't go wrong. You've got to have a backup plan. This is a great backup plan to earn an extra 2 grand a month. Trading is like learning Kung Fu. It takes years. Yeah, anyone can go and become a black belt in martial arts in 5 years. Yeah, but there's 1,000 million black belts out there. And there's only one person that gets gold, silver, and bronze out of the thousands that attempt it. That's what I liken to trading. Yeah, anyone can learn the knowledge to trade. Everybody can become an expert and put a belt on. Yeah, but very few of them will ever kick enough people to get to that top spot. And that's the reality. You spend 10 years looking for that skill set, that one martial arts move that knocks everybody for 6. You don't find it because you realize it's unagi. It's all up here. Yeah, you're trying to control an uncontrollable thing. You're trying to find a martial arts move that no one has ever done before and no one can predict. It doesn't exist. You're looking for the Holy Grail. At the end of the day, this thing moves up and down, and that is the reality of it. That's all it ever does. So all you've got to do is find a way to extract money out of something that moves up and down at random. That's really easy to do. You just put in a tiny little order and wait. And you just build your tiny little orders and move your price as you need to until it does what you want it to do. And it will always do what you want it to do at some point. You just got to survive long enough. This trade on the chart is an exact example of it. I went short, I was totally wrong. I went short again, I was totally wrong. I went short again, I was right. It took me 3 attempts. If it had taken me 6 attempts, it still would have done the same thing because the banks have got to do it. Yeah. When you understand how it moves, you understand that there's no way to make money with a stop loss in this market consistently. But that's what the ORB, there is, but not a lot. Yeah, the ORB strategy makes money long term. This EA makes money long term. But it's not going to make the same amount of money as this is going to make because it's got to be done with a much, much higher risk. If you did the ORB strategy with tiny little positions and no stop losses, you'll probably find at some point every single one of the trades that you get into with the ORB would actually become profitable. But this is great for extracting large amounts of money over a small period of time. Just because maybe it's just because I'm younger, but I actually like the idea of sitting in front of a screen looking at candles. Yeah, no, I did. Yeah, do it, AZ. My mentor, one of my mentors said to me, until you've spent 10,000 hours of chart time, you won't understand the charts. And I didn't believe him, didn't believe a word he said. And then all of a sudden things started to click and I was like, wow, why am I suddenly making this work? And I realized it's because I'd seen it before. It becomes ingrained, it becomes burnt into your retinas, this movement, this structure that this thing does becomes burnt into your retinas. You see it over and over again. But the only way you can see it over and over again is by watching it constantly. So if you want to watch this constantly, the best thing you can do is open up the strategy tester, yeah, and put it in visual mode, hit the button and sit here and watch it. I'm going to do this actually. And this is what he told me to do. He said, I want you to go and get 10,000 hours of chart time under your belt. And I was like, how am I going to get 10,000 hours of chart time under my belt? It's very easy. You just go into the strategy tester and you go and watch 5 years go past your eyeballs. Yeah. So watch this thing play out for 5 years. Watch it doing what it does over and over and over again. Yeah, it's going up and it's going down. It's going up. 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 It keeps going up and down all the time. If it keeps going up and down all the time, does it matter what I do? No. Sometimes it goes up for absolutely ages. And then it goes down for absolutely ages. What it does. If you sit here and you watch this thing over and over again, you'll see the same thing happening over and over again. You can do this anytime you like. And what I did, his drill, if you like, was every evening to spend an hour in the simulator. But watch a year go past on an instrument. And then tomorrow, watch the same year go past on another instrument. And then watch the same year go past on another instrument. And then when you've watched all 28 pairs over that year, you'll have seen what happened to the entire Forex market for that year. Then watch the next one. And then you'll see something different unfold. And you go, well, why did that not do the same as it did that year? Market conditions were different. The ATRs were different because the pound was going through a tough spot with this, that, and the other. And then you start to understand that. But you will see, your eyes will suddenly go, every time it pushes up that far and that fast, it comes back down just as hard. Which is why I always say things climb up the stairs and fall down the elevator shaft. That's one of his sayings. Why? Because I've seen it 1,000 times. I haven't seen it live 1,000 times, but in the back tester, I've seen it 1,000,000 times over decades because I've watched it. And there's tens of thousands, hundreds of thousands of hours of chart time I've put in, but I haven't put it all in here. I do this regularly every day. I'm in this back tester. I was in here yesterday, this EA that I'm testing now. I'm in here yesterday watching this. just watching the DAX fly past so I can get a better understanding of what the DAX does. What happens when that happens? What happens when that happens? When it does that, where does it go? 90% of the time, if it does that, it does this. ADR, that's how I developed the ADR indicator, because I identified that when we got to ADR, it didn't go beyond that very much. Why doesn't it go beyond it very much? How often does it go beyond it? And if so, how much percentage of the year does it do that? Why does it do that? Understand it. And you can only understand it when you see it play out. There's two ADRs back to back there. I know that because I can see the distance on the chart. I can't tell you exactly what the ADRs are, but I know after a 2 ADR push, you're going to get a pullback. Because it's very rare on a daily chart, the market goes up for 3 days without stopping. The 3 ADRs in a row, and that is Steve Malraux's theory, the 3 push. Yeah, but you prove it by watching the charts for 10,000 hours and seeing the 3 push. So when you see this, I go, well, that's coming down because it's done that. I also know the banks have got to take profit on that thing because they're overexposed in one direction. Their P&Ls are sitting with such a massive billion figure that if they don't take those billions off, the bosses of the bosses of the bosses sitting on the shareholders' desk will be going, why the hell have we not taken that money? Okay, because that's their job. Yeah, but you only know because you see it. And this is why I say in the bootcamp, give this strategy a month. If you don't give it a month, you won't experience all of the movement that you will see. You'll go into something, you'll go, this is crap, this is crap, this is, You've got to see it, you've got to do it. Which is why it takes years to learn how to do this, because you can read as many books as you like. I can tell you as much as you like. Until you've had it proved to you, you won't believe it. That's the only way you can do it. Unfortunately, it takes time, which is a pain in the backside, because that's the one thing we haven't got, and it costs money. Maybe we should have, it's nice here, maybe we should have a few of us in Spain. Yeah, you set your own little Spain group up. I'll come over on holiday. Yeah, and the other thing, Amy, is you said you can do this from anywhere in the world. Yeah, I'm going away on holiday at the end of this month to a foreign country. I shall take my laptop with me and I should be watching my portfolio every day. I won't be doing a lot, but I'll be watching it a couple of times a day and I'll be banking money. The EA will trade for me. I will watch what the EA is doing. If the EA's made some trades that make money, I'll put it in the bank from the beach. But I will be doing it, not an EA. I will be doing it because I'm the trader. It's my money. 2% a week for 5 years, 8 million rand. What do you reckon you maintain a month on average? My average is just over 10%. My monthly average. Long term, obviously, some months are down. So, like last month was 24%. Month before was negative 4.5%. Average of those 2 months is about 20%, about 10% a month. That's consistent, and you will be consistent. If you can make 10% a month, you will be consistent. If you aim for 10% a month, you'll be consistent. The trouble is everybody's teaching you can make millions a month. You can't, unless you've got billions. It's all relative. Yeah, I love following people in Telegram and Discord, all these gurus and I can see what's going on under the hood. I can see the trades they call that work and don't work. And I can see why they don't work. And I can see them blowing fortunes in this behind the scenes. Because they're trying to make something look like you can make so much money out of it. But in reality, they will always blow everything because you can't do that with this market. It doesn't work that way. Banks risk micro percentages on everything they do. There's not a bank in the world that sticks a 1% risk down on every trade it takes. Don't be ridiculous. Doesn't even use a 0.1% risk on anything it takes. Can you imagine? It's just the amounts of money involved. Doesn't happen. Look at the people that have done it in the past. Yeah, they're very famous. People like Nick Leeson brought down Barings Bank. Why? Because he over-risked, he over-leveraged on a position trade. Yeah, Nick Leeson's trade was a position trade. He took a long. He added to the long. He added to the long. He added to the long. He came back in the next day and the long had gone down because the market collapse was going. So he added some more. Yeah, that initial trade was 10 times larger than it should have been. That initial trade was 10 times larger than it should have been. Barings Bank went bust because one bloke put on too much risk. There are controls in place. They cannot do that now. Why do you think so? Because that's how you blow accounts. Anybody that's teaching anybody to risk 0.5% to 1% is nuts. Unless you're using a stop loss, in which case, absolutely fine. But make sure you're happy to be stopped out by 1% every time. Your account will drop by 1% every time you get it wrong. Accept it. That's fine if you can do that. But that's not how the banks do it, because it doesn't work. Well, it does work, but very, 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 very hard. And you're not going to make a fortune out of it unless you've got a big amount of money. Franco, you can bring your guitar. Franco, you've got lots of guitars. I can see them in your profile picture. This is to the Spain party. I can be an honorary member. Yeah, I can be honorary Spanish. Trading for years, but only became profitable on demo a couple of months ago after watching the bootcamp. Yeah. Want to trade for the next 10 years. Is there any specific advice you'd give? Just keep trading. Just keep doing it. You learn by repetition. You learn by experience. Yeah. I used to be in recruitment when I left college and I went out and got a job. I got a job in recruitment. And you had different people coming in. You had newly qualified people who had read every book under the sun and got an exam paper, but had never worked in an office. And then you had qualified people come in with 3 to 5 years experience. And then we had what was called a QBE, qualified by experience person. Those people tend to be somewhere in their 40s to 60s, but they'd been working for 30 years in the industry. If ever we put a candidate that was fresh out of college with every piece of knowledge under the book in front of somebody with 3 to 5 years experience who wanted more money because they were better than that guy, and a QBE that came in and just wanted to work, they would always get the job. Qualified by experience, because they'd done the job, they knew the job inside out, they knew the pitfalls, they'd been through everything that's ever happened in the past. So they knew that when that person came on board, they could just put anything on their desk and they'd do it because they'd done it before. Qualified by experience. So this is becoming qualified by experience, doing. And the more time you spend doing, the more experience you'll gain, the faster and the better you will become at doing it. You still can't predict the future. I come in here every day and do an analysis. How many times am I right? How many times am I wrong? I don't even count. Doesn't matter, does it? What happens is I need to get into a trade. I deal with the outcome of that trade after that trade has happened, because I don't know which way that trade's going. My experience has taught me that you cannot predict that. Anybody that tries to sell you a course or a book or an indicator or an EA that pretends to do that is lying. Or they also are not qualified by experience because they've just built something and gone, I've tested this for 2 months. It looks fantastic. I'll see if anybody wants to buy it. They've never used it. 90% of the products on the marketplace are, isn't it? Rubbish. But, you know, it's all about time, spending time in it. So the only advice I would give you is keep doing what you're doing. And do not try and do this full time until you have enough money in the bank to support yourself for a minimum of 3 to 6 months. That is everything you need to support yourself. So if your income at the moment is 4 grand, yeah, you need a minimum of 12 to 24,000 in the bank. Yeah, because if you're going to give up your job and this goes wrong for 2 months, you've got to pay yourself. And then you're going to have to find another job, which is going to take a month or 2. So you're going to need a good 4 months worth of money there. And after 2 months, you'll know if this is full time or not, and if it's right for you or not. Because all of a sudden, when you go from having a pay packet coming in every month to no pay packet coming in, and the only way you can possibly make your mortgage is by making this green, that psychology will shift big style. Yeah. So what I would say is when you trade, if you can get your trading up to 50% of what your income is consistently for 3 months to 6 months, you're probably ready to make that shift. But with most jobs, there is no shift, is there? You're either working or you're unemployed. Yeah, you can't go to your boss and say, can I not do as many hours, please? Can I halve my hours? Like, no, I need you to do it to work. All right, because I want to trade and make money this way and not work for you anymore. On your bike. Doesn't work that way. Very hard, the transition. That makes me sound like I'm transitioning in another way, but I'm not. But yeah, That's what you need to do. Or just go and get a job in a bank and use their money. That's much better. But then you've got to be qualified. And there's about 25,000 people go for every trader job in a bank. Your competition up there. Many people get there. And most people burn out within 2 to 3 years in a bank, and they come out and do this themselves. Or they just sell a course on what they know and they live off that money. Mentioning no names. If you have time, can you expand on the process of adding the EA to a pair that gives a reversal alert? Wouldn't it be too late for it to get in automatically? Adding the EA to a pair that gives a reversal alert. So what you're saying is, for example, let's say we're trading H1 New Zealand US and we wanted to get in long, we missed it. Yeah, is that what you're saying? Is that what you mean? I think I know what you mean. So I'll tell you what we do. Let's look at an ADR. Different one, is it? Aussie Swiss. There you go. So Aussie Swiss, no, we haven't had one there. Aussie US. No, we haven't had one. So the way that I work, or the way I used to work, I'm pretty much trading everything now, but the way that I used to work was, for example, US dollar CAD. I've missed the reversal alert, okay? So what I will do is, on US dollar CAD, I will go to US dollar CAD. And find it. There. Okay. This is the mean reversion. Doesn't make any difference though. Same process, yeah. So I've missed. Let's do it properly. Let's do it on the 5-minute chart, because we need to see the reversal out really. Yeah. So missed that reversal alert there. So what I will do is I will put the EA on the chart and tell it to go short only, yeah, using whatever settings I want, my normal settings. Yeah, I've missed the reversal alert, okay? So it's not going to take that trade, but it's going to take the next if I need to. So what I do is I put it on the chart and say, go short. I want you to use whatever risk parameters. I want you to scale in for me, whatever distance apart, etc., etc. So just a normal position trade. So 3/4 of an ADR apart, set a basket TP of 1 ADR or whatever you want to do, however you would normally use the EA. But it can't take that one because you've missed it. So what you do is you put the EA on and you say to it, take every short reversal alert you get from here, but you're not going to take this one because I missed it. I understand that. So you put it on the chart, yeah. And what it does is then it gives you your lot size. Okay. So the next short trade lot size is 0.58, right? So what I would then do is go over to my terminal on the US dollar CAD and go 0.58 short, sell. I'm in. What will happen now is either that entry will work and I will get out, and then I'll go back over to the VPS and I'll turn the EA off, take it off, turn it off, do whatever I want to do with it. Yeah. If that trade doesn't work, what will happen is the market will push up against me and it will give me at some point a reversal alert, and it will also take a 0.58. So I will have my own 0.58 and then a second 0.58 on. One of two things is going to happen. It's going to come down and that trade is going to go into profit. Then you have a choice. You are now double exposed and in profit, which means you make double the money. Or you can close your manual and let the EA just trade. If it goes against you, you're double exposed. That's the only downside. Yeah. So that's how I used to do it. If that's what I understand what your question was. Yeah. So basically, damn, I've missed US dollar CAD. I really fancy that. What lot size shall I use? This tells me I should be using 0.58 based on the risk parameters that I normally enter up. That's how I do the lot calculation. And then the EA either scales in for me or I remove it because the trade works. That's it. It's that simple. Yeah. So after the RSI or ADR. But the other thing is, obviously, if you want to get in, so let's say, for example, you're using ADR and we're Aussie US, yeah? So Aussie US hasn't given an alert yet. So what you can do is go over to Aussie US now, put the EA on with the ADR sets file, and it will just get you in. If you've missed the entry, take it manually, but you need to know the lot size. So I just do this because it's easy for me to do it and fast. You could have a lot size calculator or a spreadsheet or something for each pair, but it's just easy. That tells me what to do. Or you can use, if you've got the Price Action Toolkit, you could stick the Price Action Toolkit on there, set the distance to half an ADR for a stop, hit the buy button, it will automatically place that stop, then just delete the stop. But then that will have been taken with an EA number, so that's probably not the best thing to do. But a magic number. But that's basically what I have always done. This is how I've used the EA, and this is why, you know, I've always said EA is for semi-automation. I use the market reverse alerts EA to scale into the trades for me. So I will identify a condition in the market using one of the dashboards. It will either be an ADR reversal or an H1M5. So I'll look at this and go, right, I fancy getting Aussie CAD at the moment, long. So let's have a look at Aussie CAD. We haven't had a reversal alert yet. So I can just stick the EA on Aussie CAD and say, just go, get me in. I don't need to use an RSI filter. I don't need to use an ADR filter. I don't need any filters because I am the filter. I have decided, because RSI on 14 is extended, I want to go long. I just need to put the EA on the chart and say, go long. Forget any filters. I don't need RSI, ADR. We know RSI is extended. You don't need to tell the EA that. It doesn't need to know. What it needs to do is monitor the market for a reversal alert and get you in. And then if it's wrong, scale you in. And then you just manage the trade. Yeah. That's what I used to do. I'm now trading all pairs with lower exposure. So exactly what I'm doing in here, basically on this account, because after having run this on the VPS as an experiment on all pairs, I've come to the conclusion that running with about a third of the normal risk that I would normally take on every instrument is just the same thing, there or thereabouts. It's a little bit more risky, but also it means I do get into a lot of positions I wouldn't have taken because of exposure rules, but I still need to be aware of exposure. Yeah. So if there's a news event coming up and I've got 4 longs on, which is overexposed, but I'm using a third of the risk, that's still a lot of risk. So I need to obviously pay attention to it. But I think there is an argument for running the EA on every single FX pair and just letting it get you in on the RSI extensions and reverse alerts and dealing with what happens afterwards. But your risk has got to be smaller. The danger of doing it this way is that we don't get enough triggered. So if you get less alerts and less trades or positions on a month, your earnings are lower because we're using a third of the risk. We're getting a third of the reward. Yeah. So I'm relying on all euros, hopefully, or more than just 2 euros driving hard to get me into 3 positions. So I want to get overexposed because I've got lower risk on. But that 25% that I did last month, as I showed in here, didn't I? I haven't got it here now, but that 25% that I did last month with the EA on this account was all taken with 0.1 risk on all 28 pairs. And I traded all 28 pairs in July, every single pair. There was, I think it was 5, covered it in the live room yesterday morning or yesterday afternoon. There's 5 pairs that lost out of the 28. All the other 28 were all profitable. So if I'd have limited my exposure and I'd only taken 14 pairs because exposure didn't allow me to take the other trades, and those 5 losers had been in those 14, my results would have actually been worse than actually trading every FX pair. So it's actually, I think, possibly more profitable to trade them all. However, in a squeeze, when you're exposed 7 times in one direction during a squeeze, you're actually exposed more than you would have been if you're in 2 FX pairs on full exposure, as I teach in the bootcamp. So there is a downside to it. So for ease sake, stick the EA on every pair and let it do it and monitor this. And like I did today with the New Zealand dollar CAD, you know, I got out of this and I'm happy I did. But if I'd have had, for example, 5 New Zealand dollars long, right? And that one, New Zealand dollar CAD, was the only one in profit, I would be wanting to still reduce this down, even though I know that there is only a 0.1 times 4 here, whereas it would have normally been a 0.25 times 2. Yeah, that is still 0.4 instead of 0.5, isn't it? Yeah. So my exposure on 4 longs as opposed to 2 exposures long is almost the same. So when I look at my exposure now at the moment, I look at it with, if I've got 5 longs on, that's the same as having full double exposure on one currency. There's not been many instances where I've had more than 5 in one direction. And the other beauty of this way is if 2 of these hit profit because the other instrument, CAD, for example, has moved so far that it makes this a profitable trade, but these 3 don't become profitable. What I'm actually doing is banking when, if I'd have been exposed on just 2 instruments, I would have been sitting in drawdown without banking. So it can actually make you profit even when you've got a squeeze on against you. Yeah. So there is advantages, I think, to running every pair. I've been thinking about doing a video on it, but I haven't done it yet because I wanted to run it a little bit longer. Just to confirm my thoughts, but I've, you know, this account that's running in here on all these pairs, it's trading everything with lower risk and it's surviving absolutely fine. Yeah. So, but that's the way I used to do it, was literally identify and then place the EA on. Other people have said, you know, place the EA on only 10 pairs or 15 pairs. But then what happens if all the best trades this month are on the other 10? You just missed them all, haven't you? So you put the trades on whatever presents itself first. So right now, if you were trading manually, you would be going, I'm going to get into Aussie CAD and Aussie US. That's me fully exposed on the Aussie dollar. If the best trade in the world comes up now on the Aussie Swiss, you can't take it. But I'd like to take it because it's the best trade in the world. So to me, it makes more sense to use less risk and getting everything. Because you don't know what's going to work, do you? Look at the Aussie pairs on an hourly chart, yeah? So that's been coming down, the Aussie CAD. Look at the Aussie Swiss, been coming down. Look at the Aussie Yen, sideways and up. So what's the problem with taking a trade on this one? Yes, those 2 are coming down, and I'd have gone into drawdown on them, but this one I would have won. Aussie New Zealand went up and then sideways. Now it's going down a little bit, so I probably would have won on this one as well. Aussie US down. So I've got 3 pairs that have gone down with the Aussie. The other 2 had good long opportunities. Why not take all of them long? The other 2 I've banked. These 3 are no different to having 2 exposures on long, are they? I've just got less risk on. Trade everything. But do not trade everything with a 0.25% risk over half an ADR, because you are potentially 7xing your exposure. That will kill you. That will blow the account. You've got to reduce the risk if you're going to do it on all of them. But, you know, it's an experiment I've been running for a few months now, and it's, I've not been in any more. I've been through 2 squeezes, no more painful. Nothing got more painful than, in fact, it was less painful. Aussie New Zealand was less painful than if I'd have been in on full exposure at 0.25. I'd have been in horrible drawdown on that because I got out of some other Aussies that worked. It was only the fact that the New Zealand tanked and the Aussie went pop at the same time. That's why we got the squeeze. the New Zealand tanked and the Canadian tanked at the same time, you could have made money on the New Zealand dollar because the Canadian tanked faster. Yeah, so it makes sense, doesn't it? Trade everything, which is what the hedging one does. Yeah, this is what this account that's made that ridiculous 34% last month, that's doing exactly the same thing. It literally is just taking everything because it, we know that's what the market does, right? So just take everything. Yeah, just deal with the crap. And I haven't intervened, but if I had have been intervening on this, it probably would have made more than 34% because I'd have had some aggressive drawdown control positions on there that would have made a lot more money. Whether I'd have held them or not, I don't know. But it's too much work hedging. I just don't like it. For me, other people are using it. People are contacting me with the hedging set files, showing me their P&Ls. People have passed prop on it as well. You just got to get flat. That's the trouble with hedging. It's hard. I don't know. Anyway, I always was self-employed. Yeah, best way to be. Don't work for the man. What do you think about Tom Hugard, who made 2,000 in a year? Why is he different? He's not different, is he? He's made 43% loss this year so far. How's that good? He's having a bad run. It's just trading. You can make 2,000. You can make 2,000% a year if you are scalping the market on low time frames. Of course you can. If you can do that, do it. But bear in mind, you will have losses in the tens of thousands or hundreds of thousands. Yeah. If you've looked at Tom's, he posted it, I think it was yesterday, wasn't it? I follow his group as well. Because he's a brilliant trader. But he published his results, didn't he? This year. I don't know where there's so much in his group. But if you go and look at it, I think he was it 45 grand, 45% down this year from peak? Yeah, there you go. 43% drawdown so far. He's made 350 grand and he's drawn down 200 grand. Absolutely no different to any trader like me. I've made, what did I do in June? 19. I did 19% in June, 19 point something in June. I did minus 4.5 in July. No, just had. Sorry, no. April, May, June. Yeah, top that lot up. Yeah. What's Tom's P&L look like at the moment? Yeah, where is he? Yeah. The difference between me and Tom is I risk a percentage of my account. Tom risks £200 per tick. Yeah. You can make 2,000% profit if you are risking the same amount of money on everything. That's like taking a 200 lot long on the DAX, right? If that thing pops to there and you break even and then it shoots up to ADR, you'll make 50% on your account in one trade. Yeah. He limits his downside risk, but Tom gets stopped out 80% of the time, doesn't he? Yeah. If you want, I mean, I don't follow his channel because I'm in here and he's doing the same thing in the same time as me. But that's a totally different way of trading. Don't forget, Tom used to be a broker. What were we talking about earlier? Yeah. He knows how this thing works. He knows how to make money in this market. He's seen exactly the same as me. He spent tens of thousands of hours watching other people lose money to work out how to make money. He scalps with ridiculous high risk, but very tight stops. Like the opening range breakout strategy, if you get a 10R, you will make a fortune. If you don't, you will stop out with a X thousand loss. So it's a different way of trading. I don't know anybody else that can do it. Do you? Is there anybody else out there like me that puts my P&L out on the line every day and has done for years, as Tom does, that you know that does what he does? Is there anybody out there that you know that does what I do? There's a few of us that do things different. That's why we make money. There's 1,000 ways to make money in this market. Which one suits you? That doesn't suit me. I can't do that. I can't put that much money on the market at one time and try and do that. You have to have a big bank balance to start that as well. He's just taken a 200 grand drawdown. What money do you think you need to make that sort of money? Yeah, it's not the same thing. It's a totally different way of trading, but it can be done by a handful of people, a handful of the tens of thousands of people. Yeah. IC Markets has got over, I think it's something like 55,000 customers. Yeah. 85% of them lose money and 85% of them lose it within a couple of months. The rest of them are break even or just about hanging in there. Yeah. Out of those 50,000 customers, 3 or 4 of them will actually make a living because they're all trying to do the same thing. They're trying to use a stop loss above a high where the market will always go to. They don't understand market structure. And if they do understand market structure, they're still putting something in the market, knowing damn well the market's going to go there because that's what market structure does. Because they're stupid. It's a nasty thing to say, but people are stupid. Yeah. How many jobs out there would you do if you did the same thing every single day and it was wrong? Would you continue doing the same thing every day for 3, 4, 5, 6, 7, 10 years, knowing that you've done it wrong, and do it over and over again and repeat the process consistently? Ask yourself this question. Why do you do that? Right? Then ask yourself, what stops me making money? Yeah. Then watch the bootcamp and then get the light bulb and then start making money. That's literally all it is. Or become a super, super expert at the markets like Tom Hugard and have absolutely no emotion whatsoever, because that's what you're going to need. Yeah. When something's going up and you're in $5,000 of profit, add another position on. When it comes down and goes to your break-even level, knowing damn well that that's going to cost you 20,000, can you sit there and hold it? If the answer is yes, go and do it. If the answer is no, you're probably in here. Yeah. You've got to learn what works for you as an individual, because everybody's different and everybody's got a different mindset, a different psychology, a different way of working. And I am not a high stakes scalper. I like things to go slow and be consistent. I don't like having 3 days on the trot where I lose 6% of my account. Can't do it. But if you can, do it. You know, there's more than one way to crack an egg, usually with a spoon. Or you can crack it on the side of a pan. There's the only 2 I know, actually. But anyway. Yeah, it's, you know, but think about, ask yourself the question, how many people do you know that make money in that way? How many is there? There's a reason for that. You've got to be pretty special. And there's a few of them out there. They're doing the circuits. You need to pay attention to them. So it's after RSI and ADR that you apply the A. Yeah, got it. Is pound so strong at the moment? Don't know. Yep, not bad today. Yen's strong today. So is the US dollar. So the US dollar and yen are your main movers at the moment by the looks of things. Not that I'm on any of them. Still can't get any exposure on. We'll see how we get on. DAX. Shouldn't have stopped out in that DAX. So did get target on the DAX if you'd have held it. I didn't. I got out there. Target was there. It's just hit. Close. When you say 0.1 risk, you mean 0.1%? Yeah. 0.1% based on half an ADR. So the way I measure risk is based on average daily range. So when I get into a trade, if I'm going long here, I will put my stop half of an ADR away. So half an ADR is 71. Yeah. So if I was to get in long right now, my stop loss would be there. It's half an ADR. And I risk, if the market was to move down to there, I would be in 0.1% of drawdown. The market moves down to there, I'll be in 0.2% of drawdown. But I will also be adding another position. Yeah, scaling. And if it goes up by that, I can make 0.1% on my account, but I won't. I'll hold it for at least 1/4%. Everything I bank is 1/4%, 0.5%, because if I make 0.5% a day, I'm making 10% a month. So if I go long on this now and it moves up by 1 ADR, that's 1/4%. If I can get into 2 instruments that do that every day, I make 0.5%. If I make 0.5% a day, I make 10% a month. If I make 10% a month on 100 grand account, I'm making a living. That's where you got to look at it. Percentages, percentage returns, and then get an account big enough to pay out on a 10% return, or become a super expert like Tom Hugard and make millions. I've tried, I can't do it. I was going to do it. I was going to do something similar. I've got another account which has got just over 10 grand in it, which is dormant at the moment. And I was thinking, shall I have a go at compounding? Because we talk about it a lot in here. And I thought, shall I set up another account in the live room and try and double that account, but double it quick, just to show that it can be done. Basically, buy a holiday sort of thing. But the problem with it is, I don't think I could do it because my psychology isn't set up to put that high risk on and leave that much risk running. But it would be a good experiment to do. But then again, I don't really want to do it with my money because I don't think I could do it. But I might try and set up a hourly support resistance based account because that's what I do a lot on prop. Take these trades here. Yeah, this one here. Yeah, this is a support resistance bounce. Short there, half an ADR stop, and go for a 1.5R. That's it. So I was thinking maybe I'd take one of those. So that trade would have been the same. Yeah, as soon as it starts pushing away there, half an ADR stop, 1.5 ADR TP. But do that, but risk like 2% to 3% on every single trade. Yeah, and if we get a nice big runner that goes 2R, put a break even on it and see if we can get a 5 or 6 grand win out of it. Kind of like a fun account, but with real money. Just to show it can be done. But I think the outcome would be I'd be proving to you that it will blow. That's the trouble. So I don't really want to do it with a live account. But equally, if I could double an account within 2 to 3 months, which I think is pretty easy to do, pretty achievable, I should say, not easy. I could at least then draw my initial 10 grand out. And then if that 10 grand gets blown, nothing lost. But if you can double, because you can compound an account and you can double account a certain amount of times before the inevitable will happen. It will implode on itself. But if you can double an account enough to make enough to pay for a holiday or something, then it's another good way of trading. And I think that's what compounding should be used for. It's a form of gambling at the end of the day, isn't it? It's not consistent, but it works. Sometimes for a period of time. So anyway, that was come off the back of what we're talking about with Tom Hugard, because that's basically what he does. He is immensely good at doubling accounts. But no, it's so hard to do. So hard on your psychology. That's what I'm doing at the moment. I take them over the day and in the evening because I'm out to reduce my exposure overnight. That was something else I was talking about, wasn't it? Close out some to reduce it. Oh, yeah. So when we're scaling in, yeah. Right. I'm going to leave it there today. So nothing banked today. Nothing really moved today that I'm in. Nothing much is moving at all. We are getting a lot of movement, but not excessive movement. So as you can see, the only opportunities you're going to get at the moment are going to be Australian dollar based. And there is a good chance that these will move back up at some point. But I would be very wary about trying to buy into an Aussie drop at the moment, because that is an unexpected news event. So I'll probably leave them for the minute and see where we go over the next couple of days. Bear in mind, we've got the US dollar movement coming as well, starting this afternoon. So I'll be back this afternoon. We'll obviously trade the Dow, although that's had a hell of a drop today. Yeah, so half an ADR we've done today. So we'll trade the US indices. Fairly decent day on the DAX this morning. So banked a couple of grand, $1,500. So not too bad there. And we'll see how we get on this afternoon. But I'll be back tomorrow morning, same time, for the Frankfurt session, and back tomorrow afternoon as well, obviously, for the US, and obviously here this afternoon as well. So we'll see how we get on this afternoon with the US indices. But we're looking for some FX entries today as well. If we can get some RSI extensions on the 21 on these Aussies, I might have a crack. There is a chance we might get further. If we get a good push today, I'll probably go for one. But there's nothing getting extended at the moment. So just not right. All right, so have a good day. If I don't see you this afternoon, I'll be back tomorrow morning. Otherwise, I will see you hopefully this afternoon. Have a good one.